Well, good afternoon, everyone. This is Sherry. I'm your host for today's Traders Exclusive Strategy Series webinar. Today, we are having 4 expert traders with us. I'm really excited about our lineup. I like to pick one point out of each person's repertoire. One, you're going to see 2 extremely powerful but very simple to apply trading edges. Next, you're going to build a trade management plan to reduce risk and optimize profit. You're going to get an unparalleled method to predict future price moves, and you're going to learn how earnings trades reduce broad market exposure. And as you can imagine, this is just the tip of the iceberg. Please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. You'll also find the recording for today's webinar. I had some technical difficulties on October 5th, so you won't find the October 5th recording, but everything else is there. And today's will be there too, since I remembered to make sure everything was fine. Before we get started, I have to share the disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. So please take notes and write your questions down so that the presenter can do their presentation and then answer your questions at the end. And add a little context so that we know where they were in their presentation, although they'll probably know. So that takes care of that one. And right now, I'm really happy to introduce Stephen Primo of Specialist Trading. He's going to talk to us about 2 edges to help you survive any market. Stephen is a former stock exchange specialist and 45-year veteran trader. A decade ago, he teamed up with Pro Trader Strategies and formed Specialist Trading, an educational company where he's now the president and founder. Scores of students from around the world have gone on to become consistent traders after being taught Stephen's proprietary trading methods. Good afternoon, and let me find you. There we go. You should be able to unmute yourself now. And I will make you the presenter. You're still self-muted, Stephen. There we go. I see your screen.
Great. Can you see me and hear everything all right?
Yes. All right. Thanks for joining us, and take it away.
Thank you very much, Sherry, and thanks everyone for attending today. And welcome to this educational presentation where today I want to talk to you about 2 edges to help you survive any market. And that goes for any time frame as well. Doesn't matter if you trade currency pairs, Bitcoin, stocks, doesn't matter if you intraday trade or if you're a long-term investor, you can apply these 2 methods. And in fact, you'll be able to start applying them as soon as this presentation has concluded. Let me show you how simple they are, okay? Let's look at this older chart here in PLRX. Most traders looking at it would say, well, Steve, there's really no trend here. It's just kind of in a trendless market. So I've always been taught to stay away from these markets. Well, the first edge I'm going to be teaching you, actually, even though it looks like it's going trendless, this edge was telling you that the overall trend is actually up. So therefore, you only want to look at this from a buyer's perspective. Now, once you apply the second edge, you'll see that the short-term trend is up. Now, what we found is that when you find these 2 trends, the overall and the short-term, in sync with each other, that's a very high potential area or a synergy for success. And as you can see later on, the stock gapped up basically on some news, and it soared 15 points roughly in a day or 2. Now, the funny thing is, there was some news announcement or something that caused this to gap up, but we knew already from the 2 edges I'm going to be sharing with you that we should be looking at this from a buyer's perspective. Now, the same thing works to the downside. Once again, most traders looking at this older chart in CHTR would say, well, Steve, you know, this is a range market, and this is where you get whipsawed. Every time you buy, it goes down. Every time you sell, it goes back up. So you don't want to do anything here. This is what I've always been taught. Well, sure, we've all been taught that, myself included. But once you learn these edges, you learn to let go of things that really have no consistency. because the first edge actually identified that the overall trend is down. Even though we're going sideways in a range, the overall trend is down. Therefore, you should only be viewing this from a seller's perspective. And then once you applied the second edge, you would have seen that the short-term trend was down. Once again, when you have these two edges in sync, you have a high probability setup. And as you can see later on, the stock fell out of bed 130 points. So this is what we're going to be talking about today. Two edges to help you survive virtually any market, any time frame. Doesn't matter what type of a trader you are. So welcome once again. My name is Stephen Primo. I'm the president and founder of Specialist Trading. As Sherry said, roughly a little over a decade ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders. Now, the reason is because I've been trading for 45 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. A specialist is just simply someone who makes markets in roughly about 50 or 60 stocks. Now, I made markets during the crash of 1987, which coincidentally was today. Many years ago. It happened on October 19th. I also traded through the bull market that followed. And in the mid-90s, I left the floor to teach, to trade my own account, to also trade other people's accounts, and also to teach. So in my 45 years of trading, I've seen just about everything: straight up markets, straight down markets, sideways markets, and I've traded just about every technique or method you can think of. Even if someone says something is brand new, most likely it's been around before. It's just being rebranded, okay? Now, the reason why I wanted to teach people is to share with you the things that I have found in over 4 decades of trading that actually work, things that have simplicity, but actually have a lot of power behind them. And you're going to see that in today's educational presentation. Now, before we begin, once again, if you please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using these two edges, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples, since we are an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get some more education from us on a daily basis, feel free to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. I would recommend copying that down because every day I post different snapshots, some of our signals that have been generated in stocks, futures, currency pairs, as well as Bitcoin. I also post little bits of financial wisdom as well. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now remember, as I stated in the beginning, we are first and foremost an educational company, and that's our goal, simply to educate you. So with today's presentation, you're going to see how these things actually work. But I'd like to start out with something that my mentors taught me, because believe it or not, when I first started trading on the floor some 45 years ago, I was doing the same things that most of you have been taught. You know, learn to focus on the news, on earnings, also looking at the standard overbought, oversold tools, and looking at the things that we're always taught that are supposed to work. But I found out that they really didn't work for me. So here's what my mentors taught me. And this is today's theme as well. So what I learned trading on the floor of the exchange is basically this. Trading is really very simple, but it's the trader who makes it more complicated than it really has to be. I mean, think of it. It doesn't matter if you've been trading 30 years or 30 minutes. You can pile on more and more indicators, more and more studies, more and more systems, more and more time frames to look at whatever you're trading. It doesn't take a lot of character to do that. But it really takes a lot of courage to strip those things away that you've been taught are supposed to work and only focus on a few highly consistent techniques. Once you do that, though, that's when you start to get on the road to consistency. And that's what I did some 4 decades ago, and that's what has sustained me now for 4 decades. So these two edges I'm going to be sharing with you are extremely simple. In fact, you're going to say, this is just too easy. Why would this even work, you know? But it really does. In fact, you'll be able to experiment and do your own due diligence and see just how powerful they are. So remember, keep things as simple as possible. All right, so let's get right into it. What's the first edge? All right, well, here's the first edge, which is designed to find the overall trend. If price is above the 50-period moving average, doesn't matter if you're looking at a 5-minute chart or a monthly chart, if price is above, then the overall trend is up. It's that simple. Conversely, if price is below the 50-period simple moving average, then the overall trend is down. So why is this so important? Well, we only want to be in sync with the overall trend. In other words, we will never be selling if price is above the 50-period moving average. In other words, we'll never sell to go short. Sure, we'll sell with a profit, but we'll never sell to root against a stock or a future or a currency pair. Now, conversely, if price is below and the overall trend is down, we will never buy anything. Why? Because most likely the odds are it's going to go lower. And if you don't believe how powerful this is, go back and look at your last 10, 15, 20 trades. I can almost guarantee you that the reason why you had a loss was because you were buying below the 50-period moving average and selling above. So let's take a look at some generic charts here. Most traders would look at this and say, hey, Steve, there's no chart, no trend here, I should say. I mean, we're going down, back up, back down. But what's the first thing we do? We apply the 50-period moving average. Then ask yourself, where is price in relation to that 50-period moving average? It's above, right? So what is the market telling you? Not me, not some guy on TV, not some earnings report. What is the market telling you? It's telling you that the overall trend is up. Therefore, you should only look at this from a buyer's perspective. Now, as we look at this generic chart here, once again, most traders would say, hey, Steve, this is a whipsaw market, down, up, down, there's no trend. But is that right? All you have to do is apply the 50-period moving average. It makes no difference if this was a 5-minute chart or an hourly chart or a daily chart, it makes no difference. Apply a 50-period moving average of the time frame you're looking at and ask yourself, where is price in relation to that? In fact, I would suggest copying that down in a Post-it and sticking it onto your computer screen. So before you buy or sell, ask yourself, where is price in relation to the 50-period moving average? We call it our buy-sell line. And as you can see, price is below. So therefore, the overall trend is down, and that means we will never be a buyer. We'll only look for selling opportunities. It's that simple. Now, we found out the overall trend. Now, does this mean it works 100% of the time? No. But as traders, we know that we can't be 100% correct, just the way we know an athlete can't hit a home run 100% of the time, or a basketball player can't make a basket, or an entertainer can't have a hit album or a hit movie every time. It's just not the way life is. But we can put the odds in our favor and increase our chances for consistency if we apply this simple rule. All right, so we know the overall trend now. What about edge number 2? Well, here's what we want to do. If price is above the 50-period moving average, we look for a bar that closes in the top 25% of its range. When it does that, it is telling you, I want to go higher on the short term. So now we have the overall and the short-term trend in sync. Now, conversely, if price is below the 50-period moving average, all right, and a bar closes in the bottom 25% of its range, then the market is saying, I want to go lower on the short term. As we look back at those charts again, first of all, if you don't understand what top or bottom 25% is, take a bar just like this, it doesn't matter what time frame, divide it by 4 separate but equal parts. And if you close in the top quarter, then the market is telling you it wants to go higher on the short term. It's that simple. As we look here at this generic chart, once again, the overall trend is up. So now we look for bars that close in the top 25% like this one, and look at yet a nice run up. Now here's where most traders get confused. They say, well, Steve, yeah, but look what happened. It went right back down. Well, sure, if you had sold, you would have been very quick, because what do we have right here? Another bar, and just a few bars later, it's making new highs. So that's why most traders lose, because they get excited by a big down move. They say, oh gosh, well, I could have made money selling short, but you have to be quick because it can be right back up making higher highs. Or how about this example? When the bar closes in the bottom 25%, you just simply divide by 4 separate equal parts. If you close in the bottom quarter, the market, not me, not some guy on TV, the market is telling you it wants to go lower on the short term. So when you have that in sync with the overall trend, as we have here, the overall trend is down. We look for a bar that closes in the bottom 25%. Look what we have here, a big move to the downside. Now, you think you would have been happy buying here, thinking that you made a bottom? This is why most traders fail. You're buying below the 50 and selling above. So these are the 2 edges. Extremely simple, right? But trust me, they really work in terms of being consistent, because I have been using them for over 4 decades in my own personal trading, and they're one of the cornerstones that has been able to sustain me with my trading. Now, they're just concepts at this time. We want to make them into some type of technique, some type of tradable technique that you can actually apply. So here's what we're going to do. I'm going to share with you just one of the many ways you can apply these two. Here's a technique. And when we say technique, a technique is not a strategy. You see, the difference is a strategy comes with entry rules, exit rules, stop placement, money management. That's a full-fledged strategy or a system. A technique simply highlights a high probability entry point. That's all we're doing today, okay? We're not talking about where to exit. We're not talking about where to place your stop or where to, protect yourself. So we're just looking at a high probability entry point with this technique, okay? So let's look at this chart here in Apple. Here's an older chart in Apple going back to the summer, all right? A lot of traders would say, well, yeah, Steve, sure, it's going up, but you know what? I think it's overbought because that $10,000 course I took, which goes off supply and demand, says that there's too much demand here, it's going to go down. So I don't want to buy this here, okay? This is why traders fail. We're basing our decisions off of someone or something else that really doesn't have a high level of consistency. I remember I was taught these same things, supply and demand, overbought, oversold, Fibonacci points. I was taught all that 4 decades ago. Most of you weren't even trading, and they didn't work for me then, so I don't really think they're going to miraculously start working now in terms of consistency. And they're very difficult to understand. It's a lot easier just to keep things, as we said in the beginning, simple. So where most traders would think this is overbought, what's the first thing we do? We teach our students, regardless of what market, regardless of what strategy, to apply the 50-period moving average. And ask yourself, the most recent 3 to 5 bars, where are they in relation to the 50-period? Well, they're all closing above. Even though they may have intersected, that's okay. As long as they close above, the overall trend is up. So we're not going to look at this from a seller's perspective. We're looking at it from a buyer's perspective. Now we want to identify the bars that close in the top quarter of their range, because these are the ones that will confirm that the overall and the short term are in sync. So we've placed little green arrows below the bars that close in the top 25%. So here's what we're looking for in this technique. We want to see, obviously, that these two edges are in sync, but what you want to see are bars that close in the top 25% that are either close to or touching the 50-period moving average. And if you can get a couple in sync, anywhere from 2 to 3 to 4 to 5 next to each other, that's even a highlight that this is going to take off, because we had 2 closing right next to each other, followed by 2 just above, and then 2 more closing, and then look what happened. 28 points to the upside. The market was telling you it wanted to go higher. When you have the overall and the short term in sync, that's a high synergy for a move, a nice move in that direction. Here's an older chart in GME. Obviously, it's going down, right? But where most traders, myself included, when I was taught, would say, well, yeah, this is going down a little bit too much. In fact, that indicator I bought, it says it's tremendously oversold, so I've got to, buy this, right? We're bottoming out. Most likely, this is just going to bounce straight up and make new highs, okay? That's the way we're all taught. But what's the first thing we teach our students? Apply the 50-period moving average, and then ask yourself, where are the most recent 3 to 5 bars closing? Are they closing above or below? Obviously, they're closing below, so the overall trend is down. So now we want to identify bars that close in the bottom 25%, and we identify them with these red arrows that we have, and we have 3 consecutive bars. So this is this technique. You want to see them either touching or very close to the 50-period moving average. They're below the 50 though, and they all close in the bottom 25%. This is a high probability entry point to go short, or at least to exit your position, because the stock fell out of bed an extra 10 points. Now I know 10 points may not seem like a lot in today's volatility, but that's roughly the stock lost 30% of its value in the next week or two. Let's look at Moderna in this older chart. Once again, most traders say, well, yeah, we're going up, but we're kind of hitting some type of resistance. But if we apply the 50, we see that all the bars have closed above. We look for the top 25%, and we have 3 consecutive right here, very close to and touching the 50-period moving average. So that's a high probability for a big move, 35 points in the following week. ZTS is going lower. Most traders would say, okay, well, I don't want to sell here. It's gone down a little bit too much. But if we apply the 50-period moving average, even before we think there's support there, we see that we have 1, 2, 3. Even if we close on it, let's just say we have 2 closing here, 1 before, so the majority of bars have closed below. And then if we look for the bottom 25% bars, we have consecutive. So this is a sign that this wants to go lower. So if you're thinking about buying it, if anyone says, hey, this is major support, this is that new indicator I have that tells you where the support is, don't believe them. Listen to the market, because it tells you just about everything you need to know. And look what happened. It fell 17 points in the next couple of weeks. Here's an older chart of AMC. Once again, doesn't look like much is really happening, sideways to drifting a little bit higher. But if we apply the 50-period moving average, we see that all the bars are above, so the overall trend is up. If we look for bars that close in the top 25%, we have 3 consecutive ones right in a row. They're very close to the 50-period. So that's a very high probability sign that a move is going to happen to the upside, because you have the overall and the short term in sync with each other. You see, there's no need to look at 2 different time frames. There's no need to overcomplicate things, which is what we talked about in the beginning. Keep things simple. AMC is telling us it wants to go higher just by using these 2 edges, and it shot up 52 points in the next week. There was no news involved. There was no support and resistance. There was no overbought, oversold indicators. There were no moving average crossovers, just looking at these 2 edges. All right, here's an older chart in Netflix. Netflix has been in the news as of late, but if we go back to April, we see that nothing much was happening here, just kind of in a range. But if we applied the 50, we see that we had 3 closes below, 1 above, 1 back below. So the majority of bars have closed below, okay? But that's still not giving us enough information. Let's apply the short-term tool to see what it's telling us. And if we apply that, we see that we had 3 bars that closed in the bottom 25%, 2 right next to each other. So that's a high probability sign that this wants to go much lower. Now, this was in April. Y'all remember what happened to Netflix back in April? Fell 170 points. Now look what happened here. It gapped down and continued to go lower, all based off some announcement, I assume. I stopped looking at news 40 years ago, so I don't have any idea why this went lower. Bad news, right? Isn't it funny how we knew 2 weeks in advance to either exit this or to go short? Now look what happened. Coming in July of August, just a couple of months ago, all of a sudden we started to flirt with the 50-period moving average again. We have 1 bar close in the top 25%, but that's not enough. Remember, you need at least 3 to 5 bars closing above to tell us that the trend has changed. Well, look what happened here at the end of July. We had 4 bars closing above the 50-period moving average, so the overall trend is now up. And look what happened. We had 1 in the top 25% and then 2 right next to each other. This is a big sign that it wanted to go higher. And this chart was just conclusive up until the end of August, but we know that the stock is higher at this point. Let's look at MTCH. This is a weekly chart. Now, this is a little bit more advanced, something I just want to share with you, but as we can see, that originally these weekly bars were above the 50. We have 1 closing below, 1 back above, 2 below, so not really enough for the standard benchmark. But once we add the top bottom 25% bars, we see that there were no bars that closed in the top 25%. So this is giving us a clue, especially with these 2 right next to each other, that most likely it wants to go lower. Now, we don't know how low. This is not a predictive tool. It's just telling us that this is a spotlight. This is a highlighted area to either exit your long position or to think about getting short, because this happened last year and the stock fell 80 points coming into just a few months ago. Let's look at a weekly chart in Costco. Okay, same approach applies. We're above the 50 right here. We know that the overall trend is up. This is going back over a year ago. We apply the top bottom 25% bars. We see that we have numerous here. Now they're not closing or touching the 50 period, but we have consecutive right here. So this is a very positive sign. And coming into April once again last year, or last few months, it was up over 200 points. Let's look at a monthly chart now. Let's look at Tesla, okay? Obviously going back 2 years, sure, Tesla is going up, but we're saying to ourselves, maybe it's a little bit up a little bit too much, maybe it's overbought. But if we apply the 50-period moving average, we see no, it's still above, so the overall trend is up. We want to view all selling opportunities as, all sell-offs in the stock as buying opportunities. But what if it doesn't sell off? So we apply the bars that close in the top 25%, and they're giving us clues that this wants to go much higher. Look at the consecutive ones here. 2 together, and then 3 together. And we all know Tesla has gone straight up after that. Now, if you're an intraday trader, nothing has to change just because we change the time frame or the market. Here's the spiders. That's the ETF that represents the S&P 500. Okay, same process applies. We're looking at 10-minute bars. That's okay. We still apply a 50-period moving average of 10-minute bars. Keep it simple. We see the same process here. We're below. We have consecutive bars, and we fell a quick 7 points in about an hour or so. Okay, that's a nice way you could have made a profit. Now, all of a sudden, 2 hours later, we start to firm up. Even though we bounced, it's not giving us a clear clue until we have consecutive closes above, and look at all the bars that close in the top 25%. So this is our clue that it wants to go higher, and look what happened after that, okay? So this is the action you could see in a daily bar, okay? If you have enough volatility, you have a lot of opportunities to trade intraday, regardless of what market or time frame. Let's look at a 4-hour chart of the dollar yen, okay? Now we all know, if you've been following currency pairs, the dollar yen has been going straight up. How could we have taken advantage of that? Well, just a couple of months ago, on a 4-hour time frame, it crossed above the 50-period moving average. We have consecutive closes above. If we apply the top 25% bars, we see that we had consecutive bars together right here and 2 right here. So this is a very strong sign it wanted to go higher. And coming into last month, it was up 600 pips. I mean, that's like $6,000 per unit. We can look at Bitcoin, okay? Going back to April and May of this year, it looked like Bitcoin may have been trying to get some stability here. Maybe had a triple bottom. A lot of traders would say, well, Steve, this is major support. This is where you got to buy it, right? It's finally going to turn around and go right back up. But we tell our students the first thing they do is apply the 50-period moving average, and no way. All of the bars, the majority of the bars, I should say, with the exception of 2 here, are closing below the 50. You never want to buy below the 50 because the odds are against you that it's going to work out and go up. Now, sure, every once in a while it will work, but it's very similar to playing the slot machines in Las Vegas, okay? Because they're the same process. They're designed to give you a win every once in a while, and they give you this false sense of security that you're doing okay. But if you stay at that slot machine long enough, you're going to give all your money back. Well, buying below the 50-period moving average and selling above is the same concept. Sure, every once in a while you're going to get a big winner, but if you continue doing that over time, you're going to give all your winnings back and you'll be in the loss column. What we want to do as traders is just to get an edge. This edge doesn't have to be correct all the time. It just has to give us a little edge so that we have a higher level of consistency, and that's what the 50-period moving average does. So we automatically know that the overall trend is down. So the first rule is, if the overall trend is down, we're not going to view this from a buyer's perspective. We don't care what some guy says in a webinar or on TV. We're only going to look at this from a seller's perspective, or else we're going to avoid it altogether. Now, if we want to trade it, we can apply the top bottom 25% bars, as we see here, and we have a number of them. So they're telling us that this wants to go lower, and look what happened. Coming into this summer, it was down nearly 22,000 points. Lastly, we can look at a daily chart of gold, okay? As we see here, we're going up and then it went down. If we apply the 50-period moving average, look at the way the 50-period moving average told us that the overall trend was up, but right here at this point, it told us no longer should we be looking at this from a buyer's perspective. This was back in April of May, and look what happened. It's come down. Even though we've bounced, you see how you could have taken advantage of these 2 simple but very powerful edges. Remember, being out of sync with the market is at the root of all your losses. It doesn't necessarily mean that you have a strategy or a system that doesn't work. It could mean that you're just out of sync with the overall and the short-term trend. I firmly believe that if you just apply these 2 simple edges to whatever method, whatever market, whatever time frame you trade, you will greatly increase your odds for consistency. But you have to be in sync with what the market wants. Unfortunately, we're all taught the opposite, myself included. I was always taught to buy low and sell high, which is great if you're in sync with the overall trend. But usually we're buying low when we're out of sync, when we're buying below the 50, and we're selling high when we're out of sync, when we're selling above the 50. So what we want to do is be in sync with these 2 high probability edges, and they will really increase our odds for consistency. Now remember those 2 charts I shared with you at the very beginning. let's recap and look at them one more time. Okay, first thing we do is we apply the 50-period simple moving average. Okay, now we looked at PLRX. So first thing we want to do, even though it looks like it's a trendless market, apply the 50, and we automatically know the overall trend is up. Are we going to be a seller? Absolutely not. We'll only be viewing this from a buyer's perspective. But this doesn't mean we can just jump on in. We have to add a little bit more in the form of edge number 2, which is the top bottom 25%. So if we know the overall trend is up, we're only going to identify bars that close in the top 25%. And here they are, okay, with the little green arrow that we placed below each one. Now this edge wants us to view bars that are close to or touching the 50, and that preferably, if we could find some consecutive bars, like right here, 3 right together. Here we have 2 right together. So this is telling us it wants to go higher. And someone would say, well, why does it want to go higher? It's basically not doing anything. But we want to take this on face value. Remember, we're not interested in earnings. We're not interested in what the jobless claims are. This is not based on any of that. As I said earlier, I stopped looking at those things 4 decades ago, and I'm still here. So I'm living proof that if you don't want to, there's no need to look at those things. And look what happened. In the next week, it shot up 15 points based off some news announcement, I assume, that we knew nothing about, but there's no need to know because the market told us everything. Now, that other chart we looked at was Charter, CHTR. Once again, most traders looking at this would say, Steve, you don't want to trade this. It's an arranged market. I've always been taught, stay away from these markets. This is where you get whipsawed, right? But is it really a range market? It may be a range market, but the first thing we want to do is apply the 50-period moving average. Once we do that, we see that, yes, it's a range market, but in an overall downtrend. So what this is telling us is that even though it may be going sideways and in a range, we only want to view this from a seller's point of view. Now, we want to apply the second edge to give us a little bit more timing, and that's the bottom 25% bar, because since we're below the 50, we apply the bottom 25%, and they're represented by all these bars that have red arrows above. And as you can see, they're close to the 50. We have 3 consecutive here, 2 consecutive here, 2 more consecutive. This is not telling us, it's screaming that it wants to go lower, and look what happened. Fell out of bed 130 points. Now, do you think you would have rather bought this based off what someone was telling you on TV, or would you rather just listen to the market and learn how to make your own trading decisions? That's what we teach at Specialist Trading. So ask yourself, do you think these 2 edges I just taught you can help your trading for the remainder of 2022? We really only have a couple of months left in the year. I'm sure most of you are nowhere where you thought you would be at the beginning of the year. Most of us make these big resolutions and these promises to ourselves where by the end of the year, I want to have that extra income. Maybe I can go on that dream trip, or maybe buy that present or that car I've been looking for, or just that extra added income coming in on a monthly basis. And most of us most likely are not there. I know what that's like. I've been there before. It's extremely depressing and frustrating because you put in a lot of hard work, and most especially a lot of hard-earned cash, okay? Well, the things I just taught you today actually cost nothing. What if I could share with you 5, 10 more edges, just like this, but just entirely different, based on different parameters? Well, here's the special offer we have for all of you attending Traders Exclusive live seminar today. We're going to offer you our Secrets of a Stock Exchange Specialist training sessions. Now, this is 3 hours of trading techniques plus a full strategy. This is a video course. Roughly some time ago, I was asked to be the head speaker at a seminar, a conference in Denver, Colorado. And they recorded my 3 hours of speaking where I went over many other top edges and trading techniques that I didn't discuss today. Things about which indicator to use, which ones not to use, the #1 chart pattern, the complete rules to strategy #1. Now, this is entirely different. This is based on different parameters, and this is a pullback strategy. Now, what we taught you today was just a technique, an edge for finding high probability areas for entry. But this is the complete strategy. In other words, we give you the complete entry rules, the complete exit rules, stop placement, and money management. We also share with you an aggressive way as well as a conservative way to trade with it. So this is all included, and everything I teach in this 3-hour video seminar can be applied once again to any market and any time frame. Now, if you're not convinced that our edges can help you, let me share with you what happened last month. This happened. Yahoo Finance reported that Akero's drug meets main goal in NASH trial. Shares surged 120%. Okay, this is the way most traders trade. They'll see some news event like this and say, "Wow, that's great news. I better buy this stock." Okay, because AKRO said on Tuesday its lead experimental drug met the main goal of a mid-stage study, testing it as a treatment for a type of fatty liver disease that currently has no approved medicine on the market. So this was great news, and it triggered an 120% jump in the company's shares. Okay, so if we look at the chart, once again, most traders will say, well, gosh, there's no clue about this. How would I have known that this thing was going to take off? This is why news is important, because you don't know anything unless you work for the company or have insider information that this thing was going to take off. It was giving us no clues. That's not true. See, this is what we teach you. We teach you how to listen to the most important thing, which is the chart in front of you. Because if you applied the simple edges we taught you today, even though it looks like a sideways market, once again, if you applied the 50-period moving average, nearly all the bars were closing above, telling you that the overall trend is down. So even though you haven't got an actual trigger yet, you know that you should only be viewing this from a buyer's perspective. This is a $12, $13 stock. Now, if we add our second edge, we see that we have the bars here that have the green arrow that closed in the top 25%. Right here, we had two consecutive right next to each other. Right here, we have one touching the 50-period moving average. So this is what we're looking for. We're looking for bars that are close to or touching the 50-period moving average. And if we have two or three together right next to each other, that's even better. And then look what happened. The news came out, the stock shot up 17 points. So remember, the market tells you just about everything you need to know. The only trouble is we're never taught to listen to the market. We're taught to listen to some guy in a chat room. We're taught to wait for the news to come out. We're taught to wait for what some guy on TV is going to tell us. If you learn how to listen to the market, it's a lot simpler, as you just saw, and a lot easier than trying to figure out what the earnings are or trying to figure out what this means. It's so much more simpler. As you saw in today's presentation, these edges are extremely simple, but look how powerful they can be. So we're offering you our Secrets of a Stock Exchange Specialist training. This jam-packed with many more edges and a full-fledged strategy. This also comes with educational correspondence. I give you my personal email address. You can contact me whenever you'd like with questions. Now, normally, this course costs close to $1,000. My sister site, Pro Trader Strategies, has it on their website for close to $1,000. But because of today's presentation and all of you taking time out to join us today, we're going to drastically drop the price, not $9.97, but only $37, okay? This is for a limited time only. But for $37, less than probably you can go out for a dinner these days, $37, you'll be able to get over 4 decades of tools, techniques, and tips, as well as the strategies that I've accumulated in my own personal trading, things that I actually use to this day. So here's how to take advantage of this. Contact Pro Trader Strategies because you owe it to yourself to take your trading to the next level. Remember, we're almost at the end of the year. Take your trading to the next level. Start out next year, 2023, in the right direction. Okay, so contact Pro Trader Strategies, my sister site. There's the number if you'd like to call them directly at area code 310-598-6677. They have trading consultants manning the phones right now. They'd be happy to take your order or to answer any question you may have. That link you see at the very bottom is the link that will take you either to the info page or the sign up page for this special offer. I don't believe it's a live link though, but I believe Sherry's going to post it for us, I believe on your chat box or on your question and answer box. So she'll be able to
post it.
Okay, great, it's posted. So thank you so much. So you can go there, that'll be a live link and you can just click that on and it will automatically take you. But I would highly suggest contacting Pro Trader Strategies. As I said, they have trading consultants manning the phones. They're more than happy to take your order to the phone. You can be up and running as early as today. This is a 3-hour video course. They send you a link and you can watch it on your computer at your leisure whenever you like, and it's yours to keep, okay? But that offer is limited for a very short time, so take advantage of it before it goes back up to the $9.97 price, okay? I think we have a few minutes left. If anyone has any questions, I'd be more than happy to answer them. I don't know if Sherry, if you're going to read them to me or if I should take them off here, but I'm not exactly sure where the question and answer box is, so maybe it'd be better if you read it to me. See if I'm opening up undocking a control panel here. No, I don't.
Okay.
Go ahead, Sharon.
Nope.
Sorry.
All right, everybody, it's your chance now to ask Stephen some questions. This is a crazy great offer. And I have posted the link, the email, and the phone number. But if you have any questions, now would be a great time to do it. We have about 5 minutes left of Stephen's time. And Stephen, if there was anything else you wanted to, expand upon while we're waiting on the questions to come in, now would be a good time to cover that.
You know, what I usually get from students around this is that, like I said earlier in the presentation, is so this is just too simple, it doesn't work. So I invite you all, now that you know this process, go back and apply it to trades you had, or stocks or futures or currency pairs you've been watching, and see how it could have helped you. And remember, nothing works 100% of the time, but I'm sure you're going to find out that all of these things could have greatly increased your odds for consistency. Most of our students say, well, I was kind of skeptical when I first heard this, but then I went back and looked and I said, wow, this stuff really does work. So that's when they jump on board. So many of the students may be doing that right now. Many of your attendees may be thinking that right now. And that's fine. I totally understand. You should go back and do the due diligence, do your own research. But even that simple tool is the 50-period moving average. These are things that I've given you for free in good faith, because we really want to elevate all of our traders, all of our students. You can learn for free, and that's fine.
That's an awesome thing. My chat may not be working right. Oops, just a second. Sorry about that. I don't see any questions right now. So if you,
well, the one last thing I'd like to say, Sherry, is that a lot of students always say, well, this is a video seminar. I kind of feel like, what if I don't understand anything? All of my students get my personal email address. So don't feel like, you're out there in the cold, and if something doesn't make sense or you just don't know how to apply it, don't worry. You can always email me and I'll answer your questions as soon as possible. I was answering students' emails before this presentation, and I'll even answer them on the weekend. So you always have constant interaction with me, and that's for a lifetime. So there's great ways. It's almost like having me sit right next to you. Okay, great ways to stay in touch.
Awesome. That's fantastic. All right. Okay, guys, if you think of a question, you're going to need to email Stephen. And Stephen, do you want them to email trading@protraderstrategies.com?
Yeah,
okay.
Right. They can email them, or they can call the phone number. Either way, they'll be the questions will be answered.
All right. All right. Well, then that's what we'll do. You still have a couple minutes, unless you want to go ahead and go. It's totally up to you.
No, I think I'll hand it over to you. I just want to say thank you, Sherry, for inviting me to speak. It was great. I hope I taught you all something. And just thanks everyone at Traders Exclusive for inviting me. And I wish you all the best of success in the future.
Thank you. And I'll be in touch to have you come back again in the next few months. All right. Would that be all right?
Great. Thank you.
All right. Well, you have a wonderful day. And thanks again for being with us.
You too.
All right, folks. Now, that was Stephen Primo with Specialist Trading. My goodness, I'm getting tongue-tied. Our next speaker coming up is Eusebio Nanni. He is with Max Trading Systems with how to build a trend following strategy that works. And I just want to remind everybody that if you have to leave early, you can go to tradersexclusive.com and hit, well, it's actually easier to just type it in, tradersexclusive.com/archived_webinars. And it will be on the Traders Exclusive site. This is the link you want right up here. But if you come to tradersexclusive.com, you go to Trading Webinars, which is right over here where the green arrow is. It's not, there's no green arrow on the page, but you go to this Trading Education Webinars, and then you will see the list of all of our webinars that are up. And now I'd like to introduce Eusebio Nanni. Having a little technical difficulty with my slides jumping around. But Eusebio is a well-known and highly respected trader with 38 years experience in futures, stocks, and Forex. Eusebio has not had a single losing day of trading in the past 4 years. Wow. Some losing trades, of course, but always in profit at the end of the day. Eusebio is a popular speaker and guest presenter. We always love for him to come back and show you guys new things, and he's been interviewed on Global Prime. Thanks for joining us, Eusebio. Let me just take a second to do some housekeeping. You are now a panelist. Oh, presenter is what we want. All right. Take it away, Eusebio.
Okay, thank you very much, Sherry. Thank you for your assistance. So,
thank you.
Do you hear me well, and do you see my screen?
Yes, we do, and yes, we can.
Okay. So I thank you very much for being present today in all these presentations. And before starting, let's make me a quick disclaimer. So this presentation is for education purpose only. We do not provide investment or trading advices. Investing and trading always presents risk. So do not invest or trade money you cannot afford to lose. And past performances are not indicative of future results. So now let me present here how with the mask trading system we define a trading method. You know that there are lots of ways to trade a market or any markets: scalp trading, momentum trading, volatility trading, swing trading, position trading, but all these trading approach have one point in common. We have to define what we want to trade, and this is what I'm going to show you today, and how we proceed with the max trading system. But let me take a moment to present myself. So I am a max instructor since 2009, when its founder, Dr. Jim Pruitt, passed away. And at that time, I was a part-time trader, and I became a full-time trader. So in 2008, especially in the Forex market. Before that, I have been a service manager in the IT industry, and I have practiced that career for around 30 years. And the last 15 years, I have had the opportunity to work with important banks here in Europe, in France, Germany, Switzerland, Belgium, Luxembourg, and UK. But my interest in trading and investing lasts for 40 years now, with several markets: the Forex market, the futures market, the stock market, and the options market. I don't work alone. I have two partners, Craig, who take care of the sales support, and Chris, who take care of the technical and coaching support. And so if you have any questions, feel free to contact us at our email, support@maxtradingsystem.com. And you can even phone us with Skype at Max Trading System. So now let's go to the subject of today. So how to define a trading method, especially a trend following method. And I will describe the different steps we consider very important to define such a trading method, and then I will go into the details of these steps. So we consider that there are 5 pillars of a trading process. First of all, we need indeed a trading system, which explain the entry rules, the exit rules. Then we need also, and this is essentially, it is extremely important, we need a trade risk management approach and a money management approach. How do we handle the money we put in a trade? And then we need to understand what are the driving factors of the market. This is what I call the global context analysis. Especially when we trade the Forex market, we all know what are the driving factors. And I will come back to these factors in a moment. There is also the psychological mindset, which is extremely important. Trading is also a psychological game, if I may use that term. And so having the right mindset is important too. And then when we want to make trading a professional activity, so we need also to establish an appropriate organization. And so these are the 5 pillars I consider important when we want to develop a trading process. And today I will focus on the 3 first points, so the trading system, the trade risk and money management aspect, and the global context analysis. So now let's see more in details these different steps. Because we want to define a trend following system, we need first of all to define what is a trend and what are the movements inside these trends. Then we have also to define when a trend or a movement inside a trend will start. And we will call these moment when the trend or a movement will start, which may be perhaps a trend resumption, an entry setup or an entry setup pattern. We have identified for many years now, and you can scroll through chart for years and years, and you will see that each trend in fact starts with some common pattern. There are recurrent pattern which appears and which gives a very high probability that a new trend or a movement inside the trend will start. Now, identifying such an entry pattern is not enough. We need also to validate how worthwhile is this entry pattern. And so we consider 4 aspects in the way to validate a pattern, an entry pattern. Technical analysis, which uses a lot of techniques, will show us if we have enough momentum, enough volatility in these patterns. And so this will be a way to time our entries or our exits. The global context is also important to understand, especially in some market like the Forex market. What are the elements driving the price? Then the risk analysis. Is the trade too risky, or what is the appropriate risk to apply or to assume in that trade? And there may be other possible conditions, especially when we day trade. For example, we know that especially when we trade the Forex market, when we have an important news release, this news release can create a lot of volatility in the market. And if you are on the wrong side of the movement because your expectations of the news was not correct, you may have a big loss. Then once we have all these conditions being fulfilled, we have a trade opportunity. And then once we have opened the trade, we will have to define how to handle the trade. With the max trading system, we consider that we have a lot of flexibility if we apply a scaling technique and a scale out technique. A scaling technique is a way to progressively increase the position we are handling or the trade we are handling, the size of the trade we are handling, as long as the trend unfolds in our favor. And the scale out technique consists in reducing that position in order either to reduce the risk we are facing or to catch some profit in order to make our trades safer. And so the aim is to progressively reduce, possibly cancel the risk in order to get a risk-free trade. And once we get to that point, now we can focus on the way to optimize the profit we can extract from the trade. And of course, we will have to define as the last step when a trend or when the movement inside the trend will possibly exhaust or will reverse. Of course, we never know for sure when a trend will reverse or when a trend will exhaust, but there are some guidelines which will be extremely helpful. And so now let's consider how we can define trends and movements inside a trend. There are many techniques we can use. The most common are, I will cite 3 of them, and I will illustrate by a chart. So there is a way to define a trend as a price structure showing, for example, in a downtrend, lower highs, successive lower highs, or successive lower lows, and in an uptrend, successive higher highs and successive higher lows. But the problem when we use such kind of definition is, what do we do when we have smaller highs and smaller lows, either in a downtrend or in an uptrend? And so there is some subjectivity in the way to define a trend that way. And this does not really represent the structure of the price movement. A better way to define a trend with this kind of approach is to try to identify where the big pocket of liquidities are along these movements, because the liquidities always define the real structure of the market. Another way we can use is to use indeed a moving average or a set of moving average to define a trend. We can use a short-term moving average, we can use a medium-term moving average, we can use a long-term moving average. And in fact, if you think about that, if you use a small moving average, smaller the setting is, closer the moving average will be to the price action. And so it will define the price action. And if you use higher settings, for example, 50, 100, 200, you will illustrate on your chart what the average behavior of a higher time frame happens or is doing. In fact, when you use a combination of price itself with a moving average, you are using a multi-time frame approach in reality. And then we can use more sophisticated tools. Within the max trading system, we have defined a tool which takes into account this multi-time frame approach, and which has a tendency to give us exactly when a trend will start and when a trend will reverse. Because the difficulty when we use a moving average, for example, if we consider that an uptrend starts when the price is above a moving average, we have lost the opportunity of all the counter trend movement, which can represent also a very nice trade. And so we try to catch, in fact, the lowest low and the highest high of a trend or an uptrend or a downtrend as soon as possible. Of course, there is nothing 100% safe or certain. There are situations when we can see a trend seeming to reverse, and then a few bars later the price will reverse in the opposite direction. And so we use such an indicator which is called our slow bias indicator, which is this green and red line, which represent what the price is doing in a higher time frame. And it is red when the price is in a downtrend, it is green when the price is in an uptrend. And inside a trend, either an uptrend or a downtrend, we may have one or several movements, and these movements are defined or are limited by a very reactive indicator we call the ETF lines, which are similar to some sophisticated moving averages. And we can see that in this downtrend, we have at least two movements. So before the trend reverses to the upside. And so we have that day for the pound New Zealand pair. So essentially from the Frankfurt Open to almost the end of the day, two nice trends, one uptrend, one downtrend. And now we know how to identify a trend. We have to define how to identify the trade opportunity. And so for the trade opportunity, so we need to identify what are the patterns which constitute the entry setup. And so we have identified three such patterns. In our course, we explain in detail why these patterns make sense, because they are somewhat a footprint of the big traders, those who create the market, those who create or induce the trends or the movements inside a trend. In this example, which is the euro yen, so just a few days ago, it was Monday, last Monday. So we recognize that the trend has reversed from a downtrend to an uptrend. We are at the very beginning of the uptrend. And in all this area, we have a specific pattern which tells us, okay, now we have a high probability for a new trend to start. And we have three such type of pattern, and I'm showing one of them, which we call a safe and perfect MO. MO means momentum entry, which is a combination of momentum and volatility, in this case, to the upside. So later on, when the trend continues to unfold, we have to pay attention to some circumstances when we may have what I call fake trend. An indicator is never 100% accurate. And so we may sometimes be induced or be misled. And so the indicator will tell us that now the trend is reversing, but by observing more carefully what is happening on the main chart with what the price is in reality doing, we can conclude that we have here a fake trend. And so as long as we have a fake trend, so we stay in the previous, so in the trend, so in this case, the uptrend. And then later on, along the trend, we have another pattern, which is a trend continuation or a trend resumption pattern, and we have 4 of them. So one is illustrated on the chart, which is called a REMO. REMO means momentum sorry, a resumption momentum, and so or trend resumption. And along a trend, we may have many of them. And so we have 4 of them. One is called the REMO, so resumption momentum entry, breakout REMO, re-entry, and breakout re-entry. The re-entries being simply continuation instead of resumption. Now, once we have identified the pattern on the chart, we have to validate that pattern on several aspects. The first aspect is on a technical analysis aspect. Is the setup, so verifying certain conditions illustrated by some tools we are using, some indicators, for example, just to be sure that we have enough momentum and enough volatility, or if we are not in an overextended or extreme situation which make the setup not valid. Then we will have to analyze also the global context. What is the global context? And the global context is what drives the market. Whatever the market, of course, each market may have different driving factors. The stock market doesn't have the same driving factor than the Forex market. But globally, what I can say is the global context analysis is made of the analysis or the examinations of several factors. The first factor is what are the decisions of the central banks on the interest rates, and what is the expectations the market has about the next decision of the central bank. You know, for example, that the Fed will have its next meeting in November, and there is a very high expectations for an aggressive hike rate by the Fed. So, and how can we define that expectation? We have simply to apply the same type of analysis the central bank is doing. To make it simple, the central bank focuses on a few factors. The level of inflation, of course, and we are living a very complex situation for the moment. We are living in many countries a very high inflation. Then the gross domestic product, the GDP, and the unemployment level, employment and unemployment level. And when we analyze through the different reports which are released day after day after day, we may have an idea what the next decision will be by the Fed. The global context take also into account the relationship between the different market, what we call the intermarket relationship, because there are relationships, there are correlations. When one market is up, the other is down. For example, very often you can see that when the US dollar is strong, the US dollar pair will move in the direction of the US dollar. For example, the euro US dollar will go down, the US dollar yen will go up, but the stock market will go down. And so when we observe these relationship and correlation between the different type of market, the stock market, the bonds market is a very important one to observe. So the commodities market and the currency market, so the Forex market, so we may have an idea where the different markets are headed. And so this is important to confirm that our entry pattern, so the trade is taken in agreement with this global context. And when we day trade, we have also to take into account the market sentiment. So what are the micro expectations along the day? And then the risk analysis. So, and for that I will illustrate on a chart. And sometimes we may have to consider some other possible conditions, especially when we day trade. When we trade higher time frame, news releases, for example, can be completely ignored because the driving factor, the fundamental driving factors will put us in the right direction of the trade, whatever the news release will be. There are some exceptions always. We have all experienced black swan in the market, which creates some dramatic circumstances in the market. But let's illustrate on the chart. So here, this is the Euro Yen Monday, so 2 days ago. And so when I say that we have to, first of all, validate our entry pattern on a technical analysis point of view, so we use some technical indicator showing us if we have enough momentum, if we have enough volatility for our entry setup. Then, after we have made our global context analysis, and we have to define if the trade is in agreement with the global context. That day, the global context for the Euro Yen especially was to go long due to the different driving factor in the Forex market. And it is indeed a long trade. So my trade is in agreement with the global context. And then what is the trade we have to associate? And this made the risk we have to associate to this trade. And this may depend on the kind of a global context. The global context is not always clear. Sometimes the market is indecisive. Sometimes the market is clearly in a risk on or in a risk off position. And so we may define also the strengths of the global context. Stronger is the global context, higher is the risk we can take. Now, we never advise to take a big risk. I even consider that a 2% risk is often too much. And so very often we can take a smaller risk. So a risk we feel comfortable with. And then, so we have validated our entry pattern with our technical indicator, which tell us that the timing is good, we have enough momentum, we have enough volatility. The trade is validated with the global context, and we have defined an appropriate risk for the trade. And of course, for each trade, one definition of the risk will be a stop loss placement. Where do we place the stop loss? The stop loss is never placed on an arbitrary place on the chart or at some standard distance. Depending on the circumstances, the stop loss may be smaller or it may be larger. And we call our stop loss an ESL. ESL means an emergency stop loss, because the aim of the emergency stop loss is not only to protect the trade if the price goes wrong, goes against us, or but also to protect our trading account. We never know what may happen. And I suppose you have also faced, like myself, some circumstances when being in a trade, the internet connection suddenly has a problem, or the trading platform has a problem, or the broker server has a problem, in which case we become blind. We can no longer follow our trade. And in such a case, the stop loss will protect our account. Should in this time the price moves against us and hit the stop loss, we know what is our maximum risk. The stop loss will always represent the maximum risk we accept for the trade. Now, the risk is not only a risk in pips or points or ticks, whatever the market or the product you are trading, but it must be also a financial risk. And so if we consider that the financial risk, the maximum financial risk we have to take on this trade is 2%, we have to combine that financial risk with the size of our stop loss in order to define the size of the trade. And so once we have all these validations, so we have our entry level, our stop loss, our trade size, so we get our trade, we open the trade. Once we are in a trade, we have to handle the trade indeed. And handling the trade means what are the different actions we can, or decisions we can take in order to progressively reduce the risk along the trade, or possibly totally cancel the risk in order to be in a risk-free trade, and then how we can optimize the profit. And we do that by two essential mechanisms: banking some profit and adjusting our stop loss along the trade in the following way. So once we are in a trade and the price moves in our favor, we can define what we call exit setups with the help of several types of techniques. We can use technical indicators, we can use price pattern or price action, we can use a combination of both in order to define exit setup. In this example, I'm using an oscillator, a momentum oscillator, which is the stochastic of the RSI. It is a very common indicator. And a very common exit setup is when the price and the indicator are showing a divergence. In this example, the price is moving higher, making higher highs, and the indicator is making lower highs. So we have a divergence, which I call a basic divergence. Now, does this mean that a divergence is able to predict what the price will do? In this case, a pullback or a reversal? Not at all. We consider that no technical indicator is able to predict what the price can do, and will never, because in fact, if you understand how an indicator is built, it's simply another way to show what the price is doing. And so it's simply a mirror of the price behavior. And so it takes into account the present price and some past prices. But it doesn't mean that because we have a divergence that the price will necessarily reverse. But we have to consider using exit setup as another way to, quantify the risk we are taking in our trade. When the price begins to make a pullback, we never know how far the pullback will be. It may be a small pullback. It may be, for example, like in this area or like in this area. It may be a deeper pullback, or it may be even a reversal. And so we need to know when the pullback will become too much important to introduce a risk in our trade. And this is key. When is the risk introduced by the pullback become too much important to force us to take a decision to control that risk? And this is the key point. The way to handle the trade with the max trading system is to control the risk. And so it's a way to quantify the risk. And so once we get such an exit setup, we have to define where to place our exit level. And this exit level, if the price follows through and hit that exit level, will be the point where we will make a partial close or a total close, depending on the type of exit setup. Because we have several types of exit setup. We have short-term exit setup. We have long-term exit setup. A short-term exit setup is always a nice opportunity to bank some profit, but to keep a portion of the trade opened. And a long-term exit setup is a nice opportunity to close the entire trade. So here I illustrate with our approach what I call, so first of all, a short-term exit setup. We call it an MX, a momentum exit. And so the price has followed through, hit our exit level. So we close a portion of the trade. Which portion? We close half of the size of the trade. And we keep half of the size open just to take into account the possibility for the price to resume the trend. And at the same time, in this example, we can see that this portion of the trade has allowed to catch a nice profit of 37 pips, which in the 5-minute time frame is a nice profit to catch. And at the same time, we have a procedure to regularly adjust our stop loss as long as the price moves in our favor. And if you observe what is happening here with that first profit banking and the stop loss adjustment, first of all, the profit is larger than the stop loss size, but it's a profit only on half of the position. And so this profit alone is not enough to cover the initial risk we have taken when we have opened the trade. But once we adjust the stop loss, at some point, the entire trade will become risk-free and even will provide a guaranteed profit. In this case, we can see that this last stop loss adjustment is above the entry level. So this means that we have not only banked a profit on the MX, but the second half position is making a profit, will make a guaranteed profit. And as long as we'll be able to fine-tune or to tighten our stop loss, we will lock more profit on the second half of our position. and then on the next exit setup, so we can close the trade. Later on, when the trend will resume, once one of our other trend pattern will appear, so we can take a second trade and we will apply the same pattern. We will see here an exit setup among all the exit setup which are available, and you can define many of them. You can define exit setup with an indicator or a combination of indicator, with a combination between the price and a moving average, Bollinger Band, for example, whatever the technique you want to use. But again, this is not to predict what the price will do. It's just to quantify when the risk becomes too much important, when the price begins to make a pullback. And it's not a number of pips. It's simply the way the price is moving. You can see in this example that once I have made my partial exit, I catch a profit of 35 pips, which is almost enough to cover the initial risk. Not exactly by 1 pips, but by adjusting my stop loss, my trade become risk-free and even with a guaranteed profit. And then later on here, what I have done, instead of using my a short-term exit technique to close the second portion of the trade, I may use the trend reversal technique to close my trade. And so in this case, so my trade has made another profit with my second portion of the trade. And so 2 trades were available on the Euro-Yen that day with 2 profitable trades. Now, I don't say all the trades are profitable. We don't have a 100% winning rate. But let's check the result. The first trade has made a total profit of 65 pips, so 37 plus 28. And when we divide that size by 2, because we have 2 half position for the trade, or let's call it 2 units. So we have to divide that number by 2 to have the average result of the trade, and then by the stop loss size to have the rework to risk ratio. So we have a rework to risk ratio of 1.35 R. I'm using the Van Tarp notation here, R representing the risk, or plus 1.35 to 1. I see the 1 is missing here. So this is the same concept. So, and this means that if you use a risk of 2%, this trade number 1 alone produces a profit of 2.7%. The second trade has produced a number of pips which is a bit larger, but the result as a number of pips is never meaningful. What is always meaningful is the reward to risk ratio we get. And so here, the trade has made a 2.31 to 1 reward to risk ratio. And so in total, a nice 3.66 R or to 1. With a 1% risk, this represents a profit for the day on this pair of 3.66%. With a 2% risk, you double the result. Now, this type of exit technique, which consists in waiting for the trend to reverse, to close the trade, can be generalized when we introduce in the way we handle the trade a scaling and scale out approach. In this way, to trade I have just illustrated, we have simply an entry, a partial exit, a total exit. So no scaling technique. But along a trend, as long as the trend is valid, we can apply a scaling technique, in which case it will be necessary to define when the trend or the movement inside a trend will possibly exhaust or reverse. And this is especially critical in order not to be trapped in an important reversal. And this is the same movement as previously on the Euro-Yen with the same initial entry, but now along the trend. Whenever the conditions are appropriate and we have also entry set up for that, we can scale in. And so you can define any type of criteria to scale in, but with the max trading system, we have defined several conditions to make a scaling valid. Not only the scaling must obey a specific pattern, but the distance to a previous entry must be also respected. There is a minimum distance in order to be sure that a potential profit made by the previous entry will help to finance the second entry. And whenever we make a scaling, we call them SC, and we can number them SC1, SC2, SC3. We can make several of them along the trend. So we will open a new trade having exactly the same size as our initial entry, just to make the calculation easier. You can use variable sizes, of course, but when we use identical sizes, so it makes the calculation of the performance way easier. And so we have a first scale-in, and then immediately after the scale-in, we have an exit setup which was applicable. So we make an MX, a first MX. Later on, we have another scale-in, followed by another partial exit, followed by another partial exit, followed by another scale-in, the scale-in number 3, and then a partial exit. So you can see whenever we make a scale-in, we add 2 units. Whenever we make an MX or partial exit, momentum exit, we close 1 unit. And at the end, when we pinpoint an ETF trend reversal, we have to close the remaining open position. And how do we pinpoint a trend reversal? When our slow bias changes direction, we have to pay attention with a fake trend. But when the trend reverses and we get a short entry setup, because when we get a short entry setup, this short entry setup, if it is validated with all the steps I have previously considered, this can be the beginning of a new downtrend. And you can see that it has not been the case here, but our final exit was not bad at all. After that, the price has begun to range until the end of the day. And this happened very typically during the US session, the second half part of the US session, when you trade a pair which does not contain an American currency like the US dollar or like the Canadian dollar, the pair will begin to range. So this is a typical behavior in the Forex market. So you can see here a trade made with an initial entry, 3 scale-ins, 4 partial exit, and a final exit. And so I have noted on the chart the different profit which has been caught along that trend. And this makes a big difference. Instead of making a total profit of 148 pips with just 2 simple trades, now we have increased our profit to 440 pips with the same initial stop loss, 24 pips. This represents a reward to risk ratio of 9.17 R or 9.17 to 1. So to be compared with the 3.66 R of the simple approach, 1 entry, 1 partial exit, 1 final exit. And so you see that the profit has been multiplied by not exactly 3 times, but by more than 2 times. And so this is something you will get if you apply correctly scaling technique and a scale out technique along a trend. You may increase your profit by 30 to 300% on average compared to a trend trading system which does not include scaling technique. So, and the scale out technique will be essential to control the risk, because indeed, whenever we make a scale in, the new position will be such that the risk for the entire new position will increase. And if you do not pay attention to the level of risk you are taking at that moment, ignoring how to bank some profit to reduce the risk and ignoring how to adjust the stop loss along the trend to reduce the risk, then you are doomed to fail in trading. Controlling the risk is essential. In fact, we teach our students 2 important concepts. The first concept is, what is the essence of trading? The essence of trading is to identify a risk, to assess a risk, and then to assume the risk if we decide to take the trade. We cannot make a profit without a risk. We have always to accept a risk. But then the second concept is, what is the first priority of the trader when a trade has been taken, assuming the risk? The task, the priority is to reduce that risk, to control that risk, not to consider what is the profit we can make. We can take all the market accept to give us. I do not apply technique like closing my trade if I make a 1-to-1, a 2-to-1, or a 3-to-1. I try to take the maximum profit the market can give me or accept to give me along a trend. So, and this makes a huge, huge difference. So identifying along a trend when we apply scaling in and scaling out techniques, so we have to be able to identify when the trend reverses or exhaust. There are three types of end of a trend: the trend reversal, the trend exhaustion, when the price begins to range, and when the price begins to range, it's very possible that later the trend will resume. But if the price ranges too much, there is no utility to stay in the trade. We can consider trading something else, or we can wait for the trend to resume, but with no longer risk in the market. And we have the movement invalidation. The movement invalidation happens at some point when the price retraces too much and we have no exit setup triggering. This sometimes happens. And when the movement makes no longer sense to trade, for example, if the price makes a deeper pullback without generating an exit setup, at some point we have to consider that the long movement we are trading makes no longer sense. So we have several techniques also to define when to exit a trend. Another example, I have shown an example in an uptrend, a second example in an uptrend. So the previous example I have shown was the pair on the 5-minute time frame, which is a small time frame, but very convenient to trade and rather comfortable to trade when you get some experience. But I have said, so a trend trading system can be applied to any market and to any time frame. I'm showing here a recent trade on the S&P 500 in the 1 hour time frame. And so you can trade any time frame you want. So, and the structure of the trade will be always the same. We identify a trend reversal from a downtrend to an uptrend. Once the trend reversal has been identified, we identify the pattern for the potential trade. Once we get the pattern, we check if all the conditions of the pattern are valid. And if this is the case, we define our entry level, we define our stop loss level. And then if the price reaches our entry level, we open the trade, and then we handle the trade, taking into consideration any scaling opportunity, but also any scale out opportunity. And so along this trade, we have the first decision was an MX, so we close 1 unit. Soon after that, we had an opportunity to make a scale in, followed by another MX or scale out, followed by a second scale in, third scale out, third scale in, fourth scale out, and then our XXX when we get again a trend reversal with a short entry setup. This short entry setup is not necessarily a valid entry setup. For example, when I say that for that day we had to trade the stock market long, and so when I get a short entry setup, I will not take the short trade as long as the context tells to trade long. It's possible that due to the circumstances along the day, for example, in all this area, the conditions have changed and the context has changed, allowing to trade short. And look how it was easy then to spot this short trade. And so even on a technical analysis point of view, using the slow bias will give us very, very often nice winning trade in both directions. If we don't include the global context, with simply the slow bias, we have a winning rate between 70 and 75%, which is a good winning rate. But if we include the global context, the winning rate jumps to 90-95%. We will trade less, we will have less trade opportunity. For example, with a long global context in the stock market, we would have ignored that nice down movement if the context was still long, of course. But it doesn't matter. What matters is the result we get on each trade we take. The trade we do not take do not count, in fact. And so we may trade less, smarter, and with a higher winning rate. And in this case, if you add all the partial profit which has been taken along that trend, we can see that it was an astounding 392 points on the S&P 500. And I remind you that 1 point is made of 4 ticks. So if we calculate the movement or the trade result in terms of ticks, you have to multiply that number by 4 with a stop loss of 36 points, which may seem important, but it is never the size of the stop loss which is important if you know how to calculate your trade size. In some market, you need to have a trading account which is sometimes a little bit important. And this represents a nice 5.44R or 5.44 to 1 reward to risk ratio. This means that with a risk of 2%, this trade has given a 10.8, 10.9% profit. Even with a 1% risk, the profit is still a very, very nice profit. So, and I would like to illustrate this process by just one last example. It is a commodity, it is crude oil. Again, in the 5-minute time frame. That day, the global context was telling me that we could have traded the crude oil in both directions, long or short. There was not a very decisive context for crude oil or oil in general. And then when my slow bias has turned, for example, to red, so this has given the opportunity during the US session to trade oil short with a nice, safe, and perfect Mo entry setup. We defined the entry level, we defined the entries, the stop loss size, we check all the technical conditions, we check the validity of the trade with the global context, and we decide which financial risk to associate to the trades. And when all these factors have been defined, so we can open the trade when the price follow through and hits our entry level. And then we apply the same process. Whenever we have an exit setup, we make a partial exit, closing 1 unit. Whenever we have a re-entry opportunity, a scaling in opportunity, we add 2 units, so by opening a new trade, and so on and so on. An MX, we close 1 unit. A scaling, we add 2 units. An MX, we close to 1 unit. And when we have a trend reversal, and in this example, I illustrate what we call an anticipated ETF trend reversal. In some circumstances, by observing what the price is doing, by observing what the slow bias is doing, and by observing what another bias we call a fast bias is doing, we can anticipate a trend reversal. But the trend reversal may fail. This may happen. But this is a nice point to close the trade once we get a long entry setup, so in the opposite direction. You can see in this example on crude oil, so the trade has given 56.7 points of profit, and with a stop loss of only 6.5 points, so the result has been a nice 4.36R or 4.36 to 1. And so these are the kind of trade you can catch with this kind of approach, provided you define what is a trend, what are the movements inside a trend, what are your entry setup, what are your exit setup, and how you combine them all together in order to have a strict control on the risk and in the way you handle the trade. So in the way you control, you reduce, you cancel the risk, and then how you optimize your profit with an appropriate scaling in approach. So in conclusion of this presentation, I would like to use the quote, plan the trade and trade the plan. What does this mean in reality? The time is up. That's true. I have been a bit too fast. So let me just give me 2 minutes to conclude. So it is important to have a trading process. And so this is what I have tried to describe here today. We provide many more information in our courses. And so we propose 2 courses, the Max Primer and the Max Standard, which is our flagship training. The Primer is just a sample of our flagship course. And because of your presence today, we will propose you a nice discount on the course. The next course will start in November. The Standard lasts 7 weeks and the Primer only 2 weeks. And so you may have a very nice discount for these courses. And you can use the link here indicated on my PDF. So if you want to enroll, or you can always contact us at our support team, or Skype us if you want answer to some of your questions. So my presentation is complete. So now, if you have perhaps one or another question, I will be glad to answer. Otherwise, I thank you very much for your participation today.
Oh, thank you so much.
Oh,
Let me see.
I'm sorry to be a few minutes out of time.
Oh, it's okay. I have an alarm that I was in the middle of something and I totally ignored it. So I
Okay,
apologize for not letting you know sooner.
no problem.
All right. I'm not seeing any questions, and I'm almost thinking that there's a chance that my question and answer box may not be working properly because I'm not seeing anything. Now, did you have links that you wanted me to send out?
Yes,
Yes.
I can.
I
Or
have
can
them.
I?
I have the ones that Craig sent me.
Okay,
Let me just,
that's fine.
did you want me to use the one on the screen?
They are the same links, in fact. So you
Okay.
can put the link Craig sent to you.
Okay, just a second. I'm going to get.
And
Let you
if you
go.
if
And
you
if
go
it's
on,
time to ask them, or you will need to contact. Sorry, go ahead.
if you go on our
You go ahead.
side, so maxwellingsystem.com, so you have also these information, so these links, and you can always contact Craig at support@maxwellingsystem.com. So
Greg at
yeah,
Max
that's the link for
Trading.
the standard. Yeah, indeed.
And we also have another link as well.
Yeah, for the Max Primer, which is a sample,
Yes.
a reduced version, a simpler version of the standard. Yeah.
Oh, nice. All right, I'm going to set that one up for you too.
Yeah, and there is also the personal email of Craig, Craig at I think maxtrading system.com. Yeah,
Max
yeah, and
Trading System.
yeah, and the link for the Max Primer special is correct too. Yeah. So thank you
Okay,
very much
great.
for posting the
All right,
links.
everybody. Thank you for joining us, Eusebio. I had noticed that it's been a long time since we had you in, and it was long overdue. So thank you so much.
I thank you very much, Sherry, to have invited me to talk, and I wish all of you, of course, a great success in your trading activity. Bye for now.
Awesome. Thank you. Bye-bye. All right. A very quiet day for me here because I don't think our questions are working properly. And that was Eusebio Nanni of Max Trading System. You've got the links to go and get in touch with them. That's a pretty fantastic offer that he made you. So please take advantage of it. Now we're going to welcome Simon Jousef, Chart Indicators. He's going to talk to us about, do you know how to use volume profile and market depth for Forex and CFDs? I know I just want to let you know that Simon is the head trader and trading educator for Sierra Chart Indicators. He provides day trading signals, market analysis, and education. And he held his first class in 2004. And by 2010, he had to switch to online conferencing due to global demand. He focuses his education and training on the core of what moves the markets. And, it's all about buying and selling. So volume or volume pressure is key to understanding the markets. The market makers are the ones who control the movements. And with his dynamic math-based indicators and systems, you can see the moves ahead of time. And let's see. Hi, Simon. You're self-muted. So if you come in with us, I will make you the presenter. And you will have to, oh, okay. Sorry about that.
Good
I
afternoon,
clicked.
everyone. Thanks, Sherry. Good afternoon, everyone.
Good afternoon.
I am a bit delayed, but that's okay. I will try and make it up. My name is Simon from SierraChartIndicators.com. I appreciate the time, appreciate your efforts, appreciate you being here. And Sherry, thank you for
Thank you.
the invite.
Thanks for being here.
Thank you. Sherry mentioned something about market makers controlling the moves and how to predict or how to anticipate the moves. This is key to my training room, to my education, to my members. With Sierra Chart Indicators, which is a volume-based indicators system or methodology, we offer trade calls, live trade room, indicators, which are studies. Sierra charts call them studies, education, and Sierra chart trading platform. Through the full membership, I offer Sierra chart trading platform as well to make it easy for people to, or traders to get the whole package. And of course, with the amount of support that I offer, I think this is a great amount of support that we offer. By end of the webinar, although time is not enough, there's no way I would be able to explain everything. Therefore, I offer you a lot of information on the website itself, and we offer free trials as well. You will see what the big boys are looking at, and we'll be able to have a better understanding for the trading levels, such as support, resistance, continuation zones, and most importantly, the stops, aka smart stops. Where do I put my stop loss? How do I define a stop loss? Also, the importance of having a platform that can give you a real look into market's depth or volume, right? We have a lot of videos on the website to explain this. This is the website. If you go to the education part, and I really encourage you to go to the education part. I got it. Thanks, Sherry. You will see in the education part, you will see two portions of the education. First one is fast track on Sierra charts, Sierra chart tricks and advantages. This is a series of videos to show you, and these are very short videos, to show you how simple Sierra chart can be in terms of using it, in terms of getting charts on everything. It's very simple, very short videos, and the advantages that you can get having Sierra chart as a trading platform. Section 2 of the education is what is volume profile, what is order flow, futures, CFDs, how do I trade them, volume profile. This is, I've seen people actually telling me, how can I put this kind of education on the website? You should be charging for it. Actually, in fact, these are very high-end educational videos, yet they're for free because what we have in reality is much stronger than this. It's much better than this because we offer the indicators, we offer the support. So there's a lot to it. So I decided to offer this education for free on the website. Hopefully, you'll benefit from it as a trader. Next. Volume-based indicators. This is for you if you are struggling with true support and resistance levels. I know I do also use some static or technical indicators such as Fibonacci levels, such as power lines, such as reversal levels, etc. But eventually, a volume profile will give you that final edge. Where is the true reversal? It's very important to see that with volume. This is for you if you're not knowing your stop. Most traders put random stops, or they hide their stop above the previous high or previous low or something. That is wrong because it doesn't work. Don't you think market makers know how you think as a trader, right? They wrote the books, they know. Not knowing how to manage your runners. We have a very good way of managing runners. We have, this month, I've called so far, I think 12 trade calls only because it's been very tough. We averaged about 2,300 to 2,500 ticks so far in terms of my trade calls because I call swing trades. But I had, I think, 4 stop outs, right? But some of the trades got stopped out, still made money. It's easy because we took profits on the first target, on the first 2/3 of the contracts, and then the runner got stopped out either at break even or with a minor profit. Still, the trade was profitable. So if I tell you most people need help with managing their trades, it's very important. Usually a lot of traders go for the home run, it doesn't work. Or if you're not having a mentor that can help you during the process and give you some good and fantastic trade calls on a daily basis, this is for you. So hope you pay attention, ask questions. If not today, maybe you can come back and or email us, or I will be available. We also offer 2 weeks trial. Let's learn about that. It's on the website. If you go to the website, there is a big button here, says 2 weeks trial right on top. And then click on it, you get this. With the trial, you get Sierra Chart software as a trading software. You will get our advanced indicators or studies, ready to use chart templates. So you'll get my chart templates, access to live teaching and trading room, and access to the Telegram. In our Telegram, we have indices channel, oil, nat gas, elite. This is the elite members channel. I have 146 elite members, for example. These are full members who chit chat, talk, and share information. I have Forex FX channel, which I recently also started putting Bitcoin trades on it too, as a bonus. And we have silver, gold, and gold and metals, silver and gold. So you will be able to join all of these. Okay, part of the free trial. Now, some of you would say, okay, I don't want the software. I don't want to deal with the new software. It's easy because we also offer trade calls only. It's in the offer and services pricing. You can see it. You don't have to go through this whole thing. You just follow the trade calls. You'll get access to Telegram, and that then you can ask questions too, right? Let's talk about the main indicators before putting the whole picture together. This trading methodology helped me personally a lot. I started with the tape, which is bid and ask ladder, but then soon after I improved. I thought, this is too much. You cannot really, unless you have a machine in your head, a computer, an advanced computer, you cannot understand these numbers on the tape. And I was one of the first ones who actually used it over 10 years ago. It helped me tremendously moving to the volume profile a long time ago. Hundreds of my followers and my students and my members also get help with this. Take away their volume profile from them. Really, you're blind. You cannot see once you get used to it. It also keeps the anxiety level down, because with volume profile, you are no longer guessing. You're not guessing, right? Let me explain. Volume profile, okay? First indicator, and I made this purposely. This is a NASDAQ chart. It's not only a NASDAQ chart, it's a 1 hour chart. So, and I stopped the movement of the chart. See, it's not connected, so we don't have connection, so I can explain more. This is 1 hour bar. We have the high, the low, the open, and the close. Beside it, on the side, it tells you how much volume was traded in each part of this. So basically, we had a low level here. Different. I will choose a different pencil or pen color. We had low volume here. All of a sudden, we have high volume here, which is in this area, in this price. Again, low volume here, high volume here, low volume, high volume. How does this help me? It will help me knowing that the market doesn't like the low volume areas, therefore there was not much traded here. So these areas could be rejection, whether support or resistance, rejections. But again, with one candle, you wouldn't know what happened previous to that. So it's not enough information to base your trade on. So therefore, you bring more in. Let me bring more in. Come on. Trying. Come on. Yeah, there it is. So you bring more candles in. Now I have a lot of volume with candles. Of course, the volume profile that you see, you can control it. For example, this looks messy, so just control minus, reduce it to the side. It's very user friendly. Smooth it. Now, not only I see the volume profile, but I see what happened in the past. So I see technically what happened in the past in this area, for example. Look across, I see low volume level here, so I see what happened in the past. I don't need to have numbers here to tell me. I see it printed right in front of me, right here, right? What happened, for example, here? I see rejection, and I see what happened here. So this volume profile view tells me, for example, there was a high volume area traded here, and you just look across, you will see how many times the market moved in this area. So it only makes sense to see that this area will be respected once we get there. The market would like it. Market might go through it. We call this a continuation zone. So the market will go through it because it's high volume and market likes high volume areas. It's very, very common, right? Today, I called the NASDAQ call short from the very top of the day. The very top of the day, and this is the NAS 100, this is CFD. But let's go to the NASDAQ itself. This is the NASDAQ. Do you know today I called the NASDAQ short from here, from the very top of the day? Okay, I was looking at the NASDAQ. Of course, ignore the other indicators, don't worry about it. Okay, this is the hourly chart. Looking at the NASDAQ, I'll go back to the clean chart, the hourly chart, which was almost, this is the similar, it's a different pricing because it is a CFD, it's not a futures contract. But I was looking at the NASDAQ, and this was the top of the day. So what I did, it's simple, and I will explain to you how this works. Let's assume that you don't have volume profile. This will be very interesting. Okay, hold on one second. Let's assume you don't have volume profile, but you're trading Fibonacci's. This is my Fibonacci retracement, right? From here. So far, so good. Actually, I think this was the line that I drew here, right? So for Fibonacci traders, this is a golden formula, 68% or 62% of the retracement. So far, so good. 62% of the retracement. This is your favorite trade. Now, a lot of us will be hesitant to trade it. Why? Because, you know, sometimes the market will not honor the Fibonacci level. But for me, looking at this, do you see where this stands? You notice how this works. So the market was like this, actually. In fact, it was like this. I called it short right from here. Okay, and I called it short. It's actually posted here. It's not something I'm, you know, telling you out of, you know, my pocket, but this is what I'm telling you. This is what happened. Furthermore, it went about 1,000 ticks down. Furthermore, my first call today in the room, it was not a trade call. It was a level. See this level? This is on the YM, on the Dow. See, this is a picture I provided. This is at 8:46 a.m. I said the Dow or the YM is going to lead the markets today. We have, I said a huge support, or a big support. I wanted to say a big support area. You understand it because I have a picture. Below yesterday's low. So yesterday's low is this. You see this, right? And this is below yesterday's low, my line, my black line. Don't worry about the purple line. That's another indicator which I will talk to you about. And this line, I said it will act like a do or die level, meaning if we break it, it's going to run lower. If we don't break it, it's going to back up. Do you know what happened about 30 minutes ago on the Dow, on the YM or the Dow? You see this is exactly what happened. This is the same picture that you see in front of you. This is the same picture. This is from the morning, and this is what happened just now. It poked it lower, it did not sustain, and now it moved up. Do you see the accuracy of the volume profile levels? It is very important to understand that, okay? So volume profile is something that if we take it away from my members, they are most likely, you know, they don't know what to do, because it has become a crucial weapon in their arsenal. Okay. Let me see if there are questions. Where's the questions tab? Sherry, is it possible to see it?
I'll get it for you. Just one moment.
Thank you.
And there you go. And hopefully it's working for you, but I don't have any questions here at all. Has anybody got questions? And would you type in the chat so we can see if the questions box is just not working today?
I see it. I see it, Jerry. Okay.
Mhm.
That was an old question.
Yeah, that was right at the very beginning when I did
Yeah.
my sound check. So that's what's making me think that the thing isn't functioning properly.
Thank you,
But we
Sherry.
just
So
have a really quiet group today. Oh,
yeah,
there's Marvin. Great. Okay, thanks, Marvin. Thank you for confirming that it is working.
excellent,
There you go.
excellent, very good. So far so good. And again, now if you look at the Nasdaq NQ Nasdaq, you notice how it moved up, it came down, it moved up. Do you see where it bounced? Do you see how important this level is? What did I say first thing? I said low volume areas, the market doesn't like them. See how it poked it, and now it's poking back down. You see this? So basically it came down, went up, and came back down again. And on the way, it's not only a volume profile that stopped it, but I have another indicator. It says 15-minute. This is another indicator that we offer. And I have also a SAL indicator, substantial attraction level, that you see in pink or magenta line here. Okay, so it is important to combine volume profile with your levels. It will give you the true interest of what the market wants to do. Let me show you the next indicator, and then we can talk more. I'll try and be as detailed as I can, but as I said, we have a lot of information on the website, and Sherry will share with you the link that I shared with her regarding offering trials, 2 weeks free trials for anybody
Would
who's
you like me to
interested.
share that now?
Yeah, just put it on the whenever you're on the not questions, but on the chat whenever,
Yes.
so people
I
can
just
see.
sent it out. It's a 2-week
Thank you.
trial.
Yeah, thank you.
Good.
SAL indicator or study, substantial attraction level. How do I explain that? It is a very important level. I'm sorry, it's a very important indicator. Let me go back to my charts. How does it work? Give you an example. Let's go to Bitcoin. Just an example. I don't trade Bitcoin. I give signals on it. I don't trade it, but I have so many members like the idea. But what do you see here on Bitcoin? You see a magenta line. So if I right click and I show you substantial attraction level, right? I have 1. I can go up to 50. I'll explain what they are. Let's go. I'm not going to change it, but what it is, we have a market makers or trading bots or hedge funds, whatever. They have entries into the market. So for entries into the market, so they have hidden entries that are not available, that you cannot see them. In some platforms, you can see them as level 2 or level 3 or level 5 market depth. It's only around the price, where the price is. You cannot see but what we have with Sierra charts, we have the bigger view. We have the historic market depth. What that means, I can see up to 50. Let me change the color to match what I have. With SAL indicator, substantial attraction levels, I can see up to 50 levels in the market, up to 50 levels that are market makers putting their entries in. Okay, so let's say I have put 20, so the highest 20 will be visible to me. Let me give you an example. Going back to the Nasdaq, this Nasdaq here has a few magenta lines. You see them across, right? You see them across, magenta lines. Look at here, magenta. These are very high entry levels, contracts. So let's assume we have 20 of them, 20. And the highest one is here, and the highest one usually is thicker. You can customize it. And this represents a number of, let's assume 100. Just give it a number. This is the highest one. So now, all of a sudden, another trading bot or another entity puts 105 contracts somewhere here. 105 contracts, right? What happens is now this one here becomes small or disappears. Now this one shows up because you have only 20. So that's how it works. It's an indicator that not very complicated, but you need to understand it. One of the things that I use it for is, for example, silver. I told everybody silver, once it comes back down to 17 area, it's going to go back up to 20. 17, again, it's not 100% tradable at this time. I don't know. It has to give me confirmation at that time. So 17 is, or below 17, 16.8 is a good level. But once we get there, it might go back, reverse to 20. Why 20? Because with the highest entry in the silver, and it's been sitting there for many days now, it's 20, right? Crude, I told everybody today, once we break above 85, we might have an uptrend. But again, if we stay above 85 by tomorrow, we might have an uptrend completely all the way to 96. Okay, these are important for our trading. If you look at my levels on NASDAQ, for example, just an example, this is from today. Nothing strange, nothing from the past. This is from today. This is at 8:47 a.m. I told everybody NASDAQ, it's still bearish towards this price, right? And of course, after I called it, after I said that, I did not call the trade. The NASDAQ went up a little bit to this level, and then from there it started bouncing down. So now, you understand attractions, the idea behind what I'm saying, attraction levels, right? Any questions on this? All right, so next one. I'll do the next one and we will power lines. Okay. How many of us here understand fractals, know about fractals? Let me see. Let's go back to the NASDAQ as well. And all right. Do you see these lines, up and down lines? A fractal is a very important thing in trading. There are a lot of emphasis on the fractal. Fractal is when you have a high. Let me change color so we don't. We have a high, like a wick, like a high of a candle, but two previous highs that are lower, at least two on each side that are lower highs. So some could be 5 on one side, 2 on one side, doesn't matter, but you have to have at least two highs on each side that are lower. So this is a fractal. Now you remember, excellent. So now I have this is the fractal up, the fractal down the same. You have a low and you have two at least on each side that have lower lows than this one. That's a fractal, right? So fractals connected. So there's another high, for example, there's a fractal. So once you connect the fractals, you have a trend line. You have we call it power line. Now my indicator fractals or power lines is not only fractals. I have added the end of buying, end of selling from the tape. So there's embedded volume inside it, right? So now let's go back to the trade call that I made this morning on the NASDAQ, which was the hourly. This is the hourly, right? Remember I said I called the trade, let me go back to the clean version of the NASDAQ, which was NAS 100. Yes. So I called it from here. Tools, rectangle, called it from here, right? Now, if I look at this price, which was here, but I'll go back to the future. Sorry, I'm doing futures and CFDs at the same time. I'll go back to the future side. Future side. What was the 12 here? 60 minute. Here. I'm sorry. So if I take all the other indicators, if I take this from here, this was the high. Do you notice that there was also a line sitting here? You see this trend line? We call it a power line. This helped tremendously. Also, notice the SAL indicator above. When we have another indicator which called DRL, dynamic reversal level, I don't think I'll have enough time to explain it. If I do, I will. But notice how the power line held it down. If I look at 67, 65 tick chart, look at this beauty right here. Do you see this? Two power lines held it. Fractal, fractal, plus volume created this line, and these two power lines held it. So there was a tremendous amount of pressure to bring it down. Now, do you think that was my main indicator? No, these are just confirmation. My main indicator remains volume profile. You see the low volume area. Do you see low volume area right here? That indicated the trade. Now let me give you some examples and move on. Hopefully you will like these examples. This is a trade that I called a while back in the room. Oh, sorry, in the for the members. I'm looking at a down on the crude. I'm looking at a down on the crude. This is the crude. I'm looking from 84 level or 83.80 to 81 or 78. So I'm looking at that for a short. And look at my magenta line. You see that, right? I'm looking at that to be my target. Posting. Now, I call the trade to the members from 83.75 or 83.80 area, right? And look at my target. My target is about 81. Okay. Why? Because I have a magenta line telling me this is the biggest attraction level that I have available to me now that the market will be attracted to. Sometimes these attraction levels, the biggest ones, take time, take days, sometimes take few hours. You never know. As long as you're careful trading, they will help you tremendously. So now you see this, and the market goes down. And finally, look, this was a 300 tick runner, 350 ticks runner or so, just this trade alone, right? Another example I can show you is, so this is something on the NASDAQ. What do you see in front of you? This is, I call this on the indices channel on the Telegram. But what do you see in front of you? You see obvious things. A retracement up, low volume area that's trying to poke, because this is continuation. So if we break into continuation, the market might continue higher. So this is the last point of defense. And I have 240-minute dynamic reversal level. It's another indicator that if I have the time, I'll explain. I have power lines, I have an arrow, but this is where I see my stop loss is going to be very small if I take it. I'll explain, providing I find my. If you know how to use volume profile, you will see continuation, right? And you will see also continuation And in between, there will be something called rejection zone, low volume levels, rejection zones. And again, don't trade on what I'm telling you, because there's more details to this. That's why I offer this. Offer the trial, offer my courses. But nevertheless, if you take a trade, if you're looking for a short, right, and you take a trade from here, this whole area is prone to be touched. So your stop loss is all the way above here. So the best trades are when the market actually comes back up to here, because now your stop loss is very tight. See the difference? It's very important to me because I don't like to miss these trades. So I call this trade short. What do I have at the bottom? I have attraction level, correct? Major attraction level. Boom, I called it. I'm writing the information, everything is in writing. I'm typing to members, they see it on real time on their mobiles, on their platforms, and while they're trading. So I call the trade, I take the trade, and students here with me are taking the trade too. But then it moves, look at that. It hesitates, it hesitates, it hesitates, then it moves, it breaks down, it breaks down, it breaks down. In front of me, ahead of me, there was 2 crossing power lines. This indicates a pressure against me because they're green, so they indicate a support, right? One of them is coming from the past here, the other one is coming from here. So this is a level that if it breaks, it's going to go much lower. When we have 2 crossing power lines, it means there's going to be a drastic move, and then it moves fast, right? We took target 1, okay, and then we continue. This trade alone, it gave us, I think, just over 1,000 ticks in combination between the first target and the second target. First target is on 2 contracts because we trade 3 contracts, and the last target was, I think, 780 ticks or so. So altogether was just over 1,000 ticks. The point is, when on my website, I mentioned that we give out about 1,000 ticks in trade calls per month if you follow the trades. It's not an exaggeration, because really this trade alone gave us 1,000 ticks. You see this? Eventually I exited at, I think, 780 ticks. That was the point, because I was doing the this is 781 ticks, same trade, right? So again, anticipation is important. When you anticipate, then confirming is important too. It's very important to confirm your trades, right? And this is from today. As I said, I was able to find the top level of the NASDAQ today. And today was a live trade room. So you see my members talking and chatting as well. I called it, see, right in a live situation. I said it's going to come back down. Also, I pointed to the last point of defense, the upper line, and I put a box. I said, this is the reversal level. And I showed them exactly what I'm looking at. These are live members are looking at my trades, looking at my charts, right? And it kind of hesitated, and then boom. I'm a little bit fast, but it's okay. You'll see. And then moved very fast down towards lower. And then we closed the room after that. We had the session was ended, right? And that was it. So far, so good. Any questions? Very good. Let me get a sip of water. I think I have 5 minutes left or so. Let me go. I was able to explain the main 3 indicators. So we have DRL, dynamic reversal level. We have reversal level signals.
Simon, you have 8 minutes left.
Very good. Thank you. Voice alert lines is also we have, for example, on Sierra chart, folks. If you look up, and I actually removed some of the top instruments that we trade. I look at approximately 10 instruments. And if I have a level, for example, on, let's go to the, again, to the NASDAQ or SPX or ES. If I have a level on ES on one chart, I want to trade it. For example, let's say I have the daily and I have a level, let me take out this level. I have a level here. I will put my line here on this level. It is at 3660, okay? Now this will be printed in all charts that are linked to ES. 60-minute chart, see it's printed, 3660. You see that? It's gonna print on all of them. So I can see what's happening on the big frame and break it down to the short frame as well. Now let me remove it. Let's go back to the original chart that I put it on. It's gone. So that is one of the things that, and not only does that, it also gives you a voice, an audio. It will give you an audio. For example, if I put a line here, when the price touches it,
SPX 500.
I don't know if you guys heard that, but Sherry heard it, right? If I put a line here, it will give you an audio. You heard it, okay. Crude, if I put a line here, it's on an existing line, so it doesn't work.
No, that one didn't make any
Because
noise.
it's an existing line, yeah.
CL.
CL with a chime, right? And it also gives you the name here. So it is very important for you to not to miss trades while you're looking at other instruments. So this is one of the small things that we offer with the Sierra chart indicators. Of course, as I said, if you go to the pricing and what we offer, it's all here. We offer access to the members area. If you look at the members area, it's all here. We have 3 levels. Full training advanced level has 23 videos. I am adding 2 more by next week, so we'll have 25. Explains exactly what we have. Do or die area, be detailed. How I do my top-down analysis. What is SAL indicator? What is VP? What is knife trading? All of it in details here. I make it very easy. Complete set of indicators, right? Also my templates. You don't have to struggle with charts. You will get exactly my templates as they are, right? And as I mentioned, if you go to the website, the education part, it shows you how easy it is to use Sierra chart. It's a very user-friendly. Also, we offer live room 3 days a week and 24-hour Telegram. So whenever I'm trading, I'm telegramming my members too, right? And also, finally, if you go to the website, we have a tab for YouTube. If you click on it, we have a very nice advanced YouTube channel. Take a look, ask us questions, send me emails, and we'll see you hopefully in our trials. Thanks, everybody. Sherry, thank you. And I'm done. Any questions? I'm here.
I really appreciate that. Now, does anybody have any questions before Simon goes? And I think if you look in your chat, you're going to see his links for the Sierra Chart Indicators 2-week trial. And Simon has given you all kinds of information to get in touch with them. Simon, do you want me to give them your email address?
Yes, please. It's on the website too. If you go to contact,
Okay.
it's there. But yeah, in my email is simon@sierrachartindicators.com. Very straightforward.
Okay, I was just typing it into the
You're welcome, Frank.
chat. So it's right there. Awesome. All right, fantastic. All right. Thanks for joining us, Simon. And
Pleasure.
I hope everybody gets on this and checks it out. And don't forget, you'll be getting email. And Simon, I know you're busy, and I hope you'll come back and visit us again.
My pleasure. Anytime. Thanks,
All
everybody.
right. Thank you so much. All right. We're down to the wire. And let's see. I'm going to Simon Jousef of Sierra Chart Indicators. And our next speaker, our final speaker for the day, is Dan Passarelli of Market Taker Mentoring. And he's going to talk to us about earnings trading challenge. Make this your best trading month ever. I have a cluttered screen, so now I've got it uncluttered so I can talk without messing up. Dan is an author, trader, and former member of the Chicago Board Options Exchange and the CME Group. Dan's written 2 books on options trading, Trading Option Greeks and The Market Taker's Edge. And I think there are some books in the works. He is also the founder and CEO of Market Taker Mentoring, a leading options education firm that provides online options education, options newsletters, and personalized one-on-one coaching for option traders. Some of the best news and information outlets trust Dan to provide expert analysis and opinions on the options market. Please welcome Dan Passarelli. And you're self-muted, sir, so I'll make you the presenter. Yes, and there we go. Hello there. How are you? Can't hear you yet. You're self-muted. There you go.
Hey, there we go. All right.
Yay, welcome. Thanks for joining us.
It is super good to be here. Let's see. Can you see my screen? Yes, you can see my screen.
Yes.
Oh boy. All right. So, hi folks. How you feeling today? I'm Dan Passarelli, and thanks for joining me and being with me right here and right now. I want to make sure you can hear me. So please go to the questions box and tell me what your biggest problem in trading is and whether you're willing to overcome it. Are you ready to overcome it? Hit that questions box for me. What is your biggest problem in trading and are you ready to overcome it? Let's see. Oh, I just deleted one of those comments. Oh my goodness. If you, this will help me understand that you can hear me and you can find the questions box, which I'm sure you can because I saw there were some questions. If you just answered or if you didn't answer yet, hit that questions box and let me know that you can hear me. I know Sherry can hear me. All right. Revenge trading, says Andy. Oh my gosh, Andy, you know what? I was just making a video of that this morning. Do you believe that? Holy cow, that's really, really funny. Tracy says consistency. Thomas says not enough winners. Okay, Frank says emotions. I like that. Yeah, I get it. I get it. All right. So today I'm going to share with you how you can replace uncertainty with confidence so you can profit consistently no matter what the stock market's doing using my simple data-driven, real money proven strategy, earnings trading strategy that literally takes 3 minutes to trade. This is what I do no matter what the stock market is doing, including and especially in this market right now. With unpredictable news, sudden market swings, war, inflation fears, this market's been tough for a lot of people lately. A lot of people I've talked to haven't done as well as they'd like to have because they fall in victim to surprises, head fakes, misleading narratives that make it impossible to get the results that you deserve and the financial freedom that you deserve. It is tough lately and it is not your fault. The best opportunity I know of to reclaim a feeling of control over your trading and to quite possibly make the next 6 months the best months of trading you've ever had. This unique opportunity involves trading around earnings announcements, and I have cracked the code on how to do it. And since earnings season has just begun, I agreed to come here to the Traders Exclusive family of traders, introduce how this works, and then give you the opportunity to take the next step. Sound great? Now, before we get started, I need to point out options are not for everyone. You should read characteristics and risks of standardized options before trading. Okay, each of us has the power within us to make trading a source of continuous wealth. Today, I'm going to share with you how to unlock that power. This is my promise to you. I'm going to share with you how you can replace uncertainty with confidence so you can profit consistently no matter what the stock market's doing, using this simple, data-driven, real money proven earnings trading system that hundreds of our student traders have used to go from that demoralized feeling we've all felt at some time to that feeling of satisfaction and self-assurance that we all know is possible. And that is powerful. This can literally transform your life because when you're confident, you trade better. And when you trade better, you're more confident. It's a positive circle that's easier to experience than you think. We got some crazy dogs in this house. Oh my goodness. Now, this technique I'm going to share with you makes it possible. It uses my proprietary earnings trading system. And at the end of this presentation, I'll share how you can take the next step and start getting immediate results. What do you say? Is that a fair deal? Yes? Go hit that questions box and give me a yes if you're liking this. And don't be afraid to participate here. I'm the last speaker of the day, and I've got wonderful things to share with you. Frank says yes. Tracy says yes. Thomas says yes. Edward says yes. Marvin says yes. Yeah, you guys are awesome. I love this. Oliver says yes. Okay, great. Now, in order for you to get the most out of this, I ask that throughout this presentation and afterwards, make this about you. Consider turning off your phone, closing Facebook and all your other open tabs, shut the door to the room you're in, and let yourself get immersed in what I'm about to share. Let it become part of you. Let it in. Now, be sure to stay till the end of the presentation. The most important things I'll share come later. And to keep the focus, I'm going to hold all questions. If you have a question, please write it down. I will get to them all. So let's keep it positive and have some fun. This is a pictorial representation of who I am, what I do, and some of the organizations that I've worked with. I traded for years down on the floor of the Chicago Board Options Exchange. I wrote 2 of the most popular books on option trading. I've worked with every major options broker in the US and abroad, as well as pretty much all the options exchanges in the world. And I get to be on TV a lot, but you know, enough about me, let's talk about you. I know some of you have traded options before, and I know some of you have not. So here's the thing. If you have traded earnings, I can help you do it better and be more profitable with less risk. If you have not traded earnings in the past, then you're in the right place at the right time. I am here today to share with you exactly what I look for in my earnings trading process before I make a trade and just how simple it can be. That said, I'm not saying trading's easy by any means, but I have my strategy down to a simple 3-minute scan that will blow your mind. I've taken the decision process of whether a trade is worthy of your time, money, and energy, all the way down to the amount of time you should spend brushing your teeth. All right, you're gonna love this. Hit that questions box for me. Would it be okay if I share a short and personal story? Would it be okay if I share a short personal story? Yes? Would that be all right? Edward says yes. Oliver says yes. Frank says yes. Tracy says yes. Royland says yes. All right. Thomas says yes. Good. So there I am with my little sister. This is probably 1979 or something. A lot of kids think, oh, I want to be a doctor, fireman, lawyer, whatever. For me, I wanted to be a trader, even at that age, which I know is kind of weird, right? But I did. I saw traders on TV and in the movies, and growing up in Chicago, there was a ton of it on the local news. I'd see traders in their jackets down in the financial district. These successful traders, they were all around me in Chicago. And it excited me to think that they could make money, good money, trading. So right out of college, I printed up a stack of resumes and went looking for a job. I literally knocked on every door of the Chicago Board Options Exchange building, handed out those resumes, and lo and behold, guess what? Guess what happened? I got a job, right? And that's where I got my start. I worked my way up from being a runner, which was a totally entry-level position, to becoming one of the biggest traders in my pit. I actually started trading in 1998, and life was good. I was living the dream at that point. It might have been the best time in 30 years to be where I was. And in a lot of ways, I just happened to be in the right place at the right time. Trading was easy. You could make mistakes and still make money. Because do you remember what was going on in 1998? What did the financial media call what the market was in 1998? They called it the internet, the .com, what is it? Michael says the .com bubble, right? The .com bubble. I like that, Michael. So yeah, that's right. So type a yes if you traded during the .com bubble. Hit that questions box, and I'm taking a poll here. I'm going to read the results. So this is not a rhetorical question. I want to know, go type a yes or no if you traded during what we now refer to as the internet bubble, will you? Michael says yes. Frank says no. Royland says no. Thomas says yes. Tracy says yes. Edward says yes. So you got some yeses, some no's, maybe a little more no's. I'll tell you what, if you typed a no, that's totally okay, because you know what? I'm going to share with you an opportunity you can take advantage of right now that can make you the same sort of gains, and it's just as easy, if not easier. Now, speaking of that old internet bubble, you know what happened, right? In fact, you know what eventually happens to all bubbles? They all pop. And for most, when the internet bubble burst, it didn't really look like this. Like this cute little girl who's gonna, oh, you know, beep, and the bubble pops and she giggles. It didn't look like that at all. It looked a little something more like this. This is basically what happened to a lot of people. And I don't really talk about this a lot, but this is kind of what happened for me. I'd never seen a crash like that in my career at that point. And back then, I didn't know how to handle it. And so I did better than some in some ways, but it was bad. All of a sudden, nothing worked as it had worked before. Trades I'd normally crush weren't making money. I started to lose my confidence. I was constantly second guessing myself. And I'll never forget, there's this one time where I just got completely run over by a trade. I lost $500,000 in a single day. That night, I had to go home and have a conversation with my wife, Kathleen. The plan before that was to put my next bonus away. There was going to be a big one for my kids' college funds. And that bonus was now gone. Kids' college funds were gone. And I wondered if I'd still have a job. I wondered if I would be able to keep my house. Now everything was different. But that's when I knew that I had to create a trading system that works in all market scenarios. And as fate would have it, at that moment, I was presented with an opportunity. And it's funny how opportunities seem to come right at the right time, isn't it? And when you get an opportunity, what do you do? What do you do when someone says 1, 2, 3, boom, here's a great opportunity? You take that step. There are two types of people in this world. There's those who second guess everything. Those are the people who are always looking back and not forwards, who hesitate. And then there are people who take action and create success. And from the outside, it seems like these people are always getting lucky. That's not it, is it? They take action. Hit that questions box for me. Type a yes if you're the sort of person who looks forward and takes action. If you take that step, I want to know. Let's see who we're dealing with here. I want you to proudly disclaim. Give me a yes or a no. Oliver says yes. Tracy says yes. Frank says yes. Thomas says sometimes. Michael says not always. Not always. Anybody else? We need some more yeses here, right? Michael says not. Here, listen to me. The most successful traders all have the same trait. They take action. It's about having an investor's mindset. It's about investing in yourself. Warren Buffett once said, the best investment you can make is an investment in yourself. You can't make a profit if you never make the investment. So like many opportunities can, this opportunity that I was presented with, it changed my life. It set me down the path that I'm on today. The exchange asked me to teach classes for them. And I found that this is my calling. At that time, I started trading in a regular non-professional trading account like you. And I was learning a different way to trade than I was used to. And I discovered there were strategies that I wasn't using on the trading floor, or at least not trading them the same way, that were very powerful, that could make money in all market conditions, up or down, even the most unpredictable of markets. So I made it my life's work to give back to the trading community and share these strategies with all traders and empower you however I can. And that's what ultimately led me to creating this earnings trading system that I use and all our top performing traders use. Now let's go back to 2021. Goldman Sachs was up 31% over this 12-month period. Question, would you be happy with a 31% return in a year? Give me a yes or a no. This is not a rhetorical question. Hit that questions box. I want to know, would you be happy with a 31% annualized return in a year? Frank says yes. Marvin, right out of the gate, says no. Thomas says yes. Tracy says yes. Oliver says not really. Michael says yes. We've got a kind of a mixed bag here. That's pretty interesting to me. And I think some of the folks who said no, and John says no way, that's pretty definitive. I think you guys have an interesting perspective, and I like it. 31% a year is tough for some people. But what if I told you there's a strategy that it doesn't matter if the market goes up or down, is volatile or calm, and you can still make money consistently and potentially really good money? Well, here's the big news. Traders can do better than returns like these in all markets, and you have to. Interest rates have driven the cost of loans up. That's bad for banks. People are worried about inflation and the market's irrational. That's bad for money managers. But do you know what saved firms like Goldman Sachs lately? Their trading units. Look here. Goldman has 36,600 employees. The average salary is $367,564. They're paying out a total of $13.5 billion a year in salary, and that's before bonuses. And bonuses is the big part of traders' compensation. In order for Goldman Sachs to pay out $13.5 billion, those big bonuses, all the rest of the overhead, and still retain enough to grow their business by 31%, Goldman must make hundreds of percent a year. These are the kind of trades professional traders make, and that's why they make 300 or 400 grand a year before those gigantic bonuses. When I started on the trading floor, I started with a $30,000 trading account. Making trades like this daily and weekly and monthly enabled me to turn that $30,000 well into the 7-figure area in a short period of time. That's more than 31%. This is what's possible. This is what traders are doing every day. And it's not just professional traders either. This is Vic. He was one of our traders who traded our earning system. Vic said, I've only been trading about a year in spite of all the challenges, huge market up and down swings throughout the year and all the crazy stuff happening. I actually did pretty well overall, increasing my account value by over 30% between June 20th, when I went live, and the end of the year. That comes out to about a 60% annualized return. And he was brand new to option trading. Imagine what you can do with a little training. So let me start out with another question. And this is an easy one. If you could consistently make money week after week, month after month, would you trade with more confidence? Hit that questions box for me right now. The question's in green there. If you could consistently make money week after week, month after month, would you trade with more confidence? Royland says, sure. Frank says, yes. Marvin says, yes. Tracy says, yes. Oliver says, yes. Marcus says, yes. Michael says, yes. Okay, that was the easy one. That was the easy question. John says, of course, right. Of course is the right answer, right? Adam says, yes. Okay, so that was the easy one. But here, so here's the thing. When you're more consistent, you have more confidence, which makes you more consistent. But how do you get there, right? How do you get there is the real question. And I have the answer. It's with consistency-based strategies, what I call bread and butter strategies, that because they work, and not because they work because you guess better that week, but because they are based on fact, on math. They're data-driven, they're road-tested, they're created by a professional trader, and the strongest consistency trade right now is the earnings trade. And there are several advantages to earnings trades. First of all, they're market independent. We don't care if the stock goes up or down. They're very short term on each trade, which limits broad market exposure. We don't care if the S&P 500 is going up or down. There's potentially greatly leveraged profits, which I'll share with you in a minute. There's an extremely simple yes-no test to screen the trades. And while you can trade earnings all year long, they're very concentrated into a short period of time. And the biggest week of opportunities is next week, starting October 24th. Remember that date, October 24th. That week is when there are literally hundreds of earnings trading opportunities. I like to call that money week because there are so many opportunities. And opportunities are the lifeblood of trading. Remember, it's about having an investor's mentality. You have that, right? You see a good value, a good trade, and boom, act on it. We are at the beginning of a life-changing time to trade. So when is the best time to get started? If Money Week is a week, it's 5 days away, you want to be ready for it, right? When do you want to start? Next month? Let's put it off till next year. You know, maybe the middle of next week? No, right. Marcus says right now, and I agree with that. That is the obvious answer, right? Traders need to be prepared. Now, it wasn't until I was a trader, like most of you attending this webinar, trading in a regular non-professional trading account, that I discovered the power of time spreads for earnings. Ironically, after trading thousands of time spreads on the trading floor and honing my skills with them, I learned the last 10% nuance that pushed the power of time spreads over the top for me in a rather unique way. So this may be 6 years ago or so. Long story short, found myself on the phone with the producer from Bloomberg Television for the first time. And I was pretty excited. I said, okay, what do you want to talk about? And he said, easy, Dan. Apple has earnings coming out after the close. We want you to share with our viewers a way to trade Apple's earnings going into earnings. And then I was like, oh no, this is terrible. Why would I say that? Like, why, right? I bet you're wondering that, because I bet you don't know this, but most professional traders don't trade earnings, because earnings is directionally the most unpredictable day of the quarter. At the height of my career, I was in the top 5 most profitable traders in my firm, right? My risk manager, Bob, would let me trade anything I wanted with as much of his money as I wanted. That's how much he trusted me. But I was never allowed to have a position going into earnings. Why? Because it's unpredictable. You can't predict the direction. So I told the Bloomberg producer, I go, hey, hold on one second. I will call you right back. So I went over to my trading computer and I looked for trades, right? Because those of you who know me, and I recognize some names in here, I know you know me. How are you? You know that I always put my money where my mouth is. If I'm gonna talk about a trade that I like in front of 100 million people, it's gonna be one I like that I have on, right? It's just a moral thing for me. So I was like, okay, can't buy calls or puts because those are directional. You know, for that reason, I can't sell calls or puts either, too much risk. Credit spreads, can't do that. So I was just about to give up, and I was like, well, let's try a time spread, also called a calendar. And I was like, hey, hold on a second. This is a great trade. I immediately put it on. I did the interview, and the trade made money, and I was hooked after that. And later, I came across some data that you'll hear about in a minute that then gave me the proof that this was no fluke. When the right criteria are met, this is a genuine consistency trade that can be used over and over again to crank out consistent profits during specific periods of the year, especially during earnings season. So here's a crash course. I'm going to teach you everything you need to know about time spreads in about 15 seconds. A time spread is when I buy a call and then sell a shorter term call with the same strike, or they're both puts. There you go. That's literally everything you need to know. And the data show that these usually work out great, as you'll see on the next slide, when certain criteria are met. And that's really important. I'm definitely not saying, oh, just go and trade a time spread on every single earnings trade. That would be a disaster. That would not work. But when certain criteria are met, these work great. Other times when other criteria are met, we use straddles or some other strategy. Those trigger less than 5% of the time. So mostly we're going to stick to time spreads, and let's look at why. Now, there is a lot of data here. Don't get hung up on trying to read all the numbers. Later, I'll explain how to simplify all this. For now, here's what's important. Look here. If you sell short-term options the day before an earnings event, they lose their value greatly once earnings are announced the next trading session, which is good because you're short them. Now, longer term options also lose their value between putting them on the day before earnings and then taking them off after the announcement. But the key element of this observation is that the short-term options lose way more value than the longer term ones. So what that means, and what this essentially proves, is that when certain criteria are met, trading time spreads around an earnings event is effectively a long run, consistent winning strategy. And you can see the results right here. These are basically the steps to follow this system throughout earnings season. And there's a few details involved, but this is basically the gist of it. So write this down. First, we find all stocks that have options listed on them that have earnings coming out after the close today or before the open tomorrow morning. Are you with me? Yes? It's important. You following me? Now, we can find several trades a day, and sometimes there are hundreds of opportunities. For example, starting Monday, October 24th, there are literally hundreds. Again, that is an extremely important week. That's money week, right? We screen those trades using the yes/no screen technique to see if we should continue on with the potential trade. This is your first step and will literally save you hours and hours of your precious time and make your life so much better. Not to mention, it will ensure you're only trading the best trades, the ones with edge, meaning they have a statistical advantage in your favor. So your win rate increases and your winners are bigger. You like this? Hit that questions box and give me a big old yes if you are liking this right now. Hit that questions box. Give me a big old yes if you are liking this. Edward says yes. Frank says yes. Tracy says yes. Oliver says yes. Marcus says yes. Jason says yes. Tina says yes. Excellent. So we only continue on with trades that have a positive term structure. And the greater the disparity in the term structure, the better. And this step is critical. This is what I did on the trading floor every day. And then I put it into our earnings trading system for you to make this simple for you to follow. Next, we run the is-was check by modeling the spread on tomorrow's days with the variant vol crush in both the short-term and the long-term option based on a partial reversion to the mean, but also relative to realized volatility. And we compare that to the past to get the modeled endurable gap. Okay, the modeled endurable gap is just my way of making this completely foolproof. So it's super easy for you. Once you have that, you'll know exactly which trades to put on and which to stay away from. Now, here is where most people go wrong. We put on the time spread the session immediately before earnings. This is intended to be less than a 24-hour trade. We put on, we follow the MTM proprietary earnings trade technique that I just shared, and we exit the trade at the precise time the following day. Everybody screws this up, but I will share with you how you can get the timing right later, and then it's just rinse, wash, repeat. So this is a trade I made in a previous earnings season. This is in Uber. And I went through that checklist that I just shared with you, and it triggered this trade. And so I made it in my own account. I bought 12 of the Uber March 11th 40 strike calls at $3.07. And at the same time, as part of one trade, I sold 12 of the Uber February 11th 40 strike calls at $2.12. So I paid $307 at the same time, collected $212. I paid out a net debit of 95 cents. So I invested 95 cents and I sold it the next day by just simply reversing what I did the day before. I sold 12 of the March 11th 40 calls at $2.93, and I bought 12 of the February 11th 40 calls at $1.62. I collected $1.31. So the trade made $1.31 minus 96. The trade made 36 cents, which is a 37.9% profit. Let's make this more tangible. If you bought a 12 lot like I did here, you'd have invested $1,140 and made $432 profit. Factor in commissions, of course, and this is a solid trade. Now notice, and this is important, I paid 95 cents for this trade, but at the time it was offered at 98 cents. Sometimes with a trade like this, it's tough to do that. This is what's called middling, which I'll talk more about in a second, because the bid-ask spreads are so wide, particularly on closing the trade, which is almost always the case. Using our technique of middling the markets, the profit can often be like 20 cents better than if you don't, which would be around an extra $240 more on a 12 lot like this. So this is really important stuff. In reality, managing the bid-ask spreads is one of the areas where most people go wrong. People leave thousands of dollars on the table every earnings season by not doing this one little part right. This is a skill that can change a trade or a trader from being just okay to being great, right? So now I want to make this very realistic and show you exactly how this works in real life when you're trading an earnings trade where you middle the market with the technique that we use. These are some screenshots of my account on an earnings trade that I made in a past season. This is in BMY. So I went through that checklist, everything checked out. It triggered this trade. I bought 20 of the BMY November 19th 58 calls at $1.59. Sold 20 of the BMI October 29th 58 calls at $1.05. So paid a net of 54 cents. But here's what's important. Here's what's special about this trade. So the one that I had to buy, the November 19th calls, those are down here. Those were offered at $1.61, but I didn't pay $1.61. I paid 59 cents. I paid less. The ones that I had to sell, those were bid at $1.03. That's where the market says I can sell them. But I didn't sell them at $1.03. I sold them at $1.05. I sold them for more. I bought these 2 cents less, sold these for 2 cents more. I did 8 cents better than a typical trader. On a 20 lot like this, that's $160 of extra money, win, lose, or draw. So it's really, really important to get this technique down. Now, let's talk about the exit. So earnings came out. I waited until the market closed. The next morning, I waited for 3 things to happen. And once those 3 things to happen, I've got my order in and I got filled and I sold 18 of them. Not the full 20, but did I panic? Did I wonder why? Did I change my price and all that? No, I've got a simple set of instructions on how to get out of it, a simple checklist. And I waited and, less than a minute later, I got filled on the balance. So overnight, this turned out to be a 40.7% profit, actually in less than 24 hours. That's about $440 of profit in money terms minus commission. So that was 37.9% on the previous trade, 40.7% on this one. Hey, this is great, right? Will all trades work out exactly like this? No, there will be some that lose occasionally, and I think it's important to share that with you so you understand how that works. This is Caterpillar. So I went, again, real trade I made, I went through that checklist, and it did trigger this trade. And so I ended up buying 3, there's a split fill here, I bought 3 of the May 20th 215 calls at 8.28, and I sold 1 of the April 29th 215 calls at 4.42. It's a net debit of $3.86. So what ended up happening? Well, earnings comes out, after the market closed, the earnings comes out. The next morning, the market opens, and exactly what I didn't want to have happen happened. The trade really got away from me. This is where many traders panic, right? But I didn't panic because I've got a simple checklist to follow. I wait for the 3 things to happen. Then I've got my order in here, and I got filled I just simply closed my trade at $3.60. Ended up being a 7% loss, which is $78, right? And I have made hundreds, if not thousands, of these trades. There's another one in pen, right? Go through my checklist, put on this trade, buy 10 of the February 18th, 46 calls at 302, sold 10 of February 4th, 46 calls at 227, paid 78 cents for the time spread. Market closes, earnings comes out the next day, market opens, I wait for 3 things to happen. When it does, I've got my orders in. This one, I sold that spread at $1.11. That comes out to a $330 profit, which is 42.3% profit overnight. Again, less than 24-hour trade. And the key here, though, what is the key here? It's consistency. It's driving consistent profits. Look, if you can make $330 on one trade, $440 on another, $750 on another, and there are hundreds of opportunities, how much money can you make in just one single week trading this strategy? Next week is the big week for you to trade this, right? Thinking about everything I just shared and knowing that next week is money week, that there's hundreds of examples, I want to take one more poll. How much do you think you can make trading this strategy next week? I want you to hit that questions box. I would love for you to share with me what your thoughts are. How much do you think you can make trading this strategy next week? Edward says $10,000. Tracy says $5,000. Marcus says $12,000. Anybody else? Oliver says $3,500. And that's why a consistent system is so powerful. If you can follow a checklist, finding, analyzing, setting up, and making the trade is super simple. Closing the trade simple too. You simply take it off the next day. It just requires a little bit of nuance. Management is the key. Management makes money. That is the 3 M's of trading. And in a moment, I'll share a resource to make those nuances super simple too. Look, this is a system, and that's why this is easy. Work the system, and the system works. Now let's talk about realistic expectations. You take the actions that make things happen to make your life what it is. You believe that's true? You believe that the actions you choose determine your future? Yes, I do. I believe it 100%. And if you don't take action, if you do nothing, nothing changes, right? Profitable trading is a reality for many traders. We have traders in our online community chat room who are some of our top money-making traders. They're really successful, regular folks like you and me, who post their trades real time for all to see, who've made the decision to be profitable. Simply do it, to make that choice. And by the way, in a moment, I will reveal how you can get free access to the MTM community chat room for 6 months. Now, how often can I find trades like this? All throughout earnings season, there are hundreds. I've traded hundreds and hundreds of these. Are these returns common? Yes. These trades can yield highly leveraged returns with low risk. I literally showed you screenshots from my actual account. What if the trade doesn't work out? Risk is limited, but more importantly, manageable, and can be a small fraction of possible gains. I shared that with you too. So the question becomes, how do I do this, right? Isn't that what you want to know? Well, here's how to make this happen. This is the Total Earnings Domination All Access Premium Package. In this complete course, I'm going to share with you how to replace uncertainty with confidence so you can profit consistently no matter what the stock market is doing using my simple, data-driven, real money proven earnings trading system. And here is just some of what you'll learn in the complete course. How to easily scan the market for earnings trades. We're to get real-time data that pinpoint the winningest earnings trades, the best time of day for entries and exits, the yes-no screen technique blueprint, the earnings time spread risk checklist to maximize your gains and minimize your losses, how to calculate the modeled endurable gap, how to manage the wide bid-ask spreads on closing the trade. Very, very important. You will also 100% understand how to know when a stock is more likely to outperform on its earnings announcement, how to set up profit and loss targets, how to select the optimal expirations to maximize potential profit. You now have a new opportunity to trade more consistently using a strategy that works in all market conditions. To get a blueprint for earnings trading and watch live setups of earnings trades so you can easily follow along. To make the next few weeks your top performing weeks yet. And plus, to make back losses on trades that maybe you already made that didn't go so well. So let's be real here. Let's talk about who this is not for. This is not for people looking for a get-rich-quick scheme or gamblers. Yes, it's possible to make a lot of money in a short period of time, but I want to be clear. This is not gambling. This is not guessing. I've done the math. You just follow along. You trade with a mathematical advantage like a professional trader, and it's completely simplified so anyone can do it. This is also not for people who would rather spend time and money and endure losses to learn on their own over many years' time. That is stupid, right? Your time is valuable, right? You want to miss years and years of foregone profits by not knowing how to do this? No, this is the fast track. Now, this is also not for wishy-washy procrastinators, overthinkers, but I know that that's not you because you have that investor's mentality, right? You showed up today. You invested your most valuable asset, your time. So you know who this is for? This is for you. If you want more consistency, this is for you. If you want low-risk trades with high profit potential, this is for you. If you believe your success is tied to following a methodology, this is for you if you can follow a few simple steps. This is for action takers. And for my action takers, I am going to make this really easy for you right now. This is our total earnings domination 6-month all access premium package. First, let me share with you what you're going to get today with this class. You begin with the brain dump part of the training, the Secrets to Trading Earnings Bootcamp video. In this class, I'm going to put 29 years of my experience into your head with one short video. This is the keys to the kingdom. That's a $2,995 value. Why is it $2,995? Because if you can make the kind of money we're talking about consistently on daily trades throughout this earnings season and the rest of your life, this small one-time investment can pay you over and over again for a lifetime. And as you can see, there is no auto renewal on any of this. I want you to get up and running fast. So I also created the Total Earnings Domination Accelerator video course. These 3 short videos give you all the information you need to get started now. But we also want you to literally have this mastered. So you're also getting today our 4-part on-demand video masterclass, Earnings Trading Techniques from 2 decades on the CBOE trading floor. You'll know exactly what to do every time. This puts the power into your hands. Now, isn't it important that you can put the actual knowledge to use? That you can actually do it? Well, today you are going to get hands-on training Starting on October 24th, that's in 5 days, you will log in and watch me trade live in a real money account. You'll see exactly what to do as you follow along with me as I reveal my top picks of the day. You'll literally see the system being traded in the live market, and you'll make your first trade together with me as a group. This is the ultimate hands-on training. This is an all-access premium package for $8,086. But I recently created a couple more bonuses that I'd like to share. To start with, I want to make sure that this works for everyone, regardless of your experience level as an option trader. Even if you're brand new to options, to make sure this works for you, today you're going to get the Options Impact Quick Start video course. This on-demand course levels the playing field for beginner option traders. It covers all the basics you need to begin trading options confidently. Even if you've never traded an option before, you'll be able to start trading like someone who's been trading successfully for years. And this will put you on the fast track to maximize your gains this earnings season. Meet Jill from Cincinnati, Ohio. She joined our class a year, 2 years ago or so. One of the first trades she did together with us in the live coaching. She bought a Microsoft time spread that met our criteria, as did I and the other students in the class. She bought the spread at $2.65, and in less than 24 hours, sold it for $3.75, locking in a 41.5% profit. And she posted real time in the MTM community chat room, which you will have the same access to. Today, you're getting free 6 months of the MTM community chat room. You will log in and get all your questions answered by me or our other coaches. But another huge sort of secret benefit is that in order for you to be successful with this system, I need to put you in a community of traders who are going through the same struggles as you. And some have gone through those struggles and made it to the other side and are now massively successful. And they post their trades live, real time for all to see. This is what one of our traders who joined us in the chat room said. Jason Fullen from Leander, Texas said, I closed IBM for 85 cents or a 124% profit. Opened the trade at 38 cents. And you know what? This was his first total earnings domination trade, a $1,000 winner on his first trade. So what that means is first you're going to get the Secrets to Trading Earning Bootcamp video. You're going to get the Accelerator video course to get you up and running fast, and you will have this technique mastered with the Masterclass. Then you're going to get the hands-on training you need to all but ensure your success. And then we're going to give you, if you're new to options, you're going to watch the quick start videos first to get newer traders up and running fast. And then you'll have your support group for questions, trade ideas, learning from other traders, all in the MTM community chat room. This is an all-access package, including the bonuses for $9,765. But I want to make sure that this works for every trader here. I want to make this a complete no-brainer, completely irresistible, so you can confidently and immediately join us right now. A 1,000,000-mile journey begins with the first step, and this is that step. Go to markettaker.com/TED right now and get all this for a small, easy investment of just $497. 1, 2, 3, boom. That's market as in stock market, taker as in take what is rightfully yours, 2 T's in a row, markettaker.com/TED, and join us now for a one-time small, easy investment of just $497. That is a massive 94.9% off discount, and it is valid only for the first 25 of you who take action right now. And let's talk about some of that. First of all, why would I give such a huge discount? Because earnings season has already begun. And I want you to be one of the 1,000 trader success stories that we strive to create this year. People who take action are the ones that can be great traders. When you see a great opportunity and fearlessly act on it. So to reward the traders who will move forward, this 94.9% off is valid only for the first 25 people to join us right now by going to markettaker.com/TED or by calling 843-724-5338. 1, 2, 3, boom. And for those of you who join us right now, here's the big bonus. Action takers, you are going to get my proprietary spreadsheet that I created to track all my trades with all the proprietary formulas on the sheet that help me make these trades confidently in just minutes. Now, I can't open this bonus up to everyone. I can't. In fact, I won't. I can only invite a handful of traders because frankly, this is too valuable. This is a $1,750 value, but this is the best way I know to all but ensure your success. I take this very personally. You're investing in your success today, and by sharing my personal spreadsheet with you, so am I. I'm giving this spreadsheet to traders who take action right now and join us during this training. 1, 2, 3, boom, right now. This is our fast action bonus. So with the trading earnings bootcamp, the accelerator videos to get up and running fast, the master class to get this mastered, the 5 live coaching sessions to get your hands-on training and see real-time how it works. And for the new folks who are getting the options impact videos to get you up and running fast, and your support group in the MTM community chat room. This is everything you need. This extra bonus of my easy spreadsheet tracker, that brings us to a total package value of $11,515 that you are getting for just $497 today when you're one of the first 25 traders to join us right now. That is 96% off the normal investment. Now look, this earnings season, it's one of the most important in the entire history of the stock market. Analysts are waiting to see what the earnings are to give guidance for the future. And that means traders can make more money than they ever have before. I really believe that. This process, it's already begun. When you enroll right now, you'll literally have just enough time to get through the brain dump training of watching the bootcamp video, the accelerator video course to get up and running right away, and the masterclass to be ready for the first live class on Monday, October 24th. These are the 5 most important classes you will attend this year, probably in your entire lifetime. This earnings season is the opportunity of a lifetime for those who choose to put that opportunity into action. So it's go time. For those of you who have been waiting for the right trading opportunity, this is an opportunity to change your life. Now, also in the past, because earnings season is, it's one quarter, right? Quarter by quarter. In the past, when someone joined, they got access for 3 months for one quarter. But I had some people tell me, but Dan, I have a commitment and I can't make all the live earnings classes. Or Dan, I'm going to be out of town for part of earnings season. So I wanted to make sure that everyone who invests in the class today is able to fully use it and get the results that you expect. So my team and I decided that with the Total Earnings Domination All Access Premium Package, we would make the class available for a full 6 months. So as of today, you'll have plenty of time to get through all the material, and you'll get to attend the 5 live earnings trading systems in January's Money Week 2. Now, these 5 hands-on training sessions are all 100% totally live. If you can't make it, they're all recorded. In each of those classes, I will reveal all the top earnings trades of the day in each of those days. I'm going to prove that anyone can do this, regardless of experience or account size. So here's my guarantee to you. I'm actually trading these trades live with my own money, so you can see exactly how it's done and follow along. In fact, I'm using less than $10,000 of my account to show you that anyone can do it, regardless of account size and regardless of experience, because you get the Options Impact Quick Start videos today as well. So right now is go time. Go to markettaker.com/TED or call 843-724-5338. This is David Z from South Lake Tahoe, California. He says, I closed the last 5 at $1.41, total gain of $425, less commissions. The class has paid for itself. Thanks, Dan. Now, I'd also like you to meet Russell from Glendale, California. He says, I'm above an 80% win rate. Most of the others were maybe a 5% loss. Tyler M, this is my favorite one. Tyler M from Lexington, Tennessee says, I took Dan's MTM course about 7 years ago in college. He started me down the path that I'm on today. Now I'm a professional trader at a fund. Now, if you want to have results like Jill and Jason and Tyler and Russell and everybody, you know what to do, right? Go to markettaker.com/TED right now. And again, this is limited to the first 25 people who join us. And I can see we've had a good number of people join us so far. So I'd like to welcome the new students, traders that we have, our new dominators. So first of all, welcome and congratulations to John from Golden, Colorado. Welcome and congratulations, my friend. Welcome and congratulations to Tracy from San Francisco, California. Welcome and congratulations. Welcome to Thomas from South Bend, Indiana. Welcome and congratulations, Thomas. Welcome and congratulations to Edward from, what is that? Oh, Portland, Oregon. Welcome and congratulations, my friend. Welcome and congratulations to Oliver. Now, hold on a second. I don't have Oliver's city or state for a reason, and I'm going to get to him in a second. I'm going to welcome the rest of you who just joined us in a second. But one of the questions that I often get is people say, hey, Dan, you know what? I have a small account, and I can see that this is an excellent way to grow that small account into a big account. But I might have trouble coming up with the $495. Is there a way to finance this? And that answer is yes. You can use PayPal and choose PayPal credit. We have a deal with PayPal to offer you both PayPal as a payment option and PayPal credit, so you can lock in total earnings domination today when you check out using PayPal and choose PayPal credit. And all you have to do is just simply go to markettaker.com/TED. Also, welcome to Michael, who joined us with PayPal. Welcome to Mohammed, who joined us with PayPal. Welcome to Glenda, who joined us with PayPal. This is great. I'm going to now take some questions to help you make the decision to come and join us today and be another one of those dominators, just like all the other folks who just joined us. Frank says, I don't know anything about options and need your support for sure. That's great, Frank, because the first thing you're going to do is you're going to watch the Options Impact video course. The Options Impact video course shows you all the basics you need to get started so that you'll be able to hit the ground running. Plus, we're there live every single day, Frank, to answer all your questions so that you will have the same opportunity as everyone else. Now look, here's some frequently asked questions I get. Is this live or recorded? It's both. I know you're busy. Not everyone can make it to the live classes. You'll attend the 5 live earnings trading classes that I mentioned, but if that doesn't work for your schedule live, that's okay. I will record them and you can watch them when it's convenient for you. So those of you who just joined us got a username and password in your email. Everybody whose names I just read, and the few that just joined us whose names I didn't read yet, go and check your email right now. If you don't see it, check your junk or spam folder. It is there. How long will I have access to this class? With the Total Earnings Domination All Access Premium package, you will get an entire 6 months access to all these materials. You will have plenty of time to master the system. Is this time consuming? No. In fact, it will save you time so you can spend it doing the things you love with friends and family. And it can save you years of struggle and foregone profits. Look, you can spend years figuring this out on your own, right? But right now is the hottest earning season you're likely to see in your lifetime. You'll be able to go through this simple course now and start seeing immediate results. How do I know I'll be able to do it? This comes with hands-on training where I'll show you live in the market exactly what to do with real live trade setups. Now, the number one question I get, is there a limit on the number of students who can join us? Yes, we have to limit the number allowed in the live component of this package, or else it gets out of hand with questions. I want to give each of you my full attention, so we have to limit the number we let in. I have a small team committed to student success. If you're committed to doing your part, we will do ours. And therefore, today is limited to the first 25 traders who are serious about maximizing your gains during earnings season. So this is crunch time. If you are ready to make it happen for yourself, I'm going to help you. You will have just enough time to get through the material you need to be ready for that live earnings session on Monday, October 24th at 2:45 p.m. Eastern Time. Go right now to markettaker.com/TED or call 843-724-5338. Whew. Now, what other questions do we have that I can answer to help you make the decision to come and join us? In the meantime, while I'm doing that, welcome Catherine. Welcome and congratulations. Welcome, Jessica. Great job stepping up and moving forward today. That's awesome. Like, you know, there's nothing that I love seeing more than for you taking that final step. I mean, look, you invested your most valuable asset in yourself today, your time, right? This is the last and final step. Everything else is all in this course. It's super easy. Welcome and congratulations to Brenda. Great job. Great job stepping up and moving forward. Welcome and congratulations to Walter. Okay, do we have any final questions? Because we are about to close this down. And in 5 days, this starts, and I need you to be ready for it. Okay? Have any final questions? All right. Well, that said, trade well, folks, and welcome to all our new people. Those of you who didn't join us, I laid out how this works, but I'd really love to give you the extra training, get you up and running fast, and literally show you exactly how to do this and give you my spreadsheet. So anyway, congratulations for those who joined us. Trade well. I will see you next week in the live training. Bye.
Thanks a lot, Dan. Thanks for joining us too.
Yeah, thanks for having me, Sherry. I really appreciate it.
All right, well, you have a good afternoon and I'll see you soon. All right, here we are, folks. It's the end of the day. Just want to share a couple of things with you. That was Dan Passarelli of Market Taker Mentoring. Please check your chat. The link is there for you to go and get this phenomenal offer. It's 6 months at $497. That's just crazy. But traders are crazy, right? Are you guys crazy? Thanks for attending. Anyway, I just want to say thank you to everyone who attended and stayed until the end. I want to thank our speakers and much appreciation for them for bringing you guys cutting edge strategies to improve your trading. So from me, your host Sherry, and all of us at Traders Exclusive, want to say trade well, and we hope you'll join us on November 2nd for our next live event. Thanks so much. Have a great day. Bye-bye.